and not do their theatrics.
And what
you're listening to?
What about
Bloomberg
DALL-E? I mean, there have been
Markets,
artists who have
Economic
been
Forum
upset
in
with
Davos,
DALL-E 2,
Switzerland. Among the
DALL-E 3.
participants,
What does that taught you?
OpenAI
How
CEO
you
Sam
think
Altman
We
and
engage with the artist
OpenAI's
community
Vice
a lot,
President
and,
of Global Affairs sitting
we
down
try to, like, do
in
their
a conversation with
someone
Bloomberg's
don't
Brad
generate
Stone.
in
Let's
my
continue
style.
with that conversation from Davos,
Even if you're not
Switzerland.
training on my data. Super reasonable. So we, implement things like that. Let me opt out of training, even if my images are all over the internet and you don't know what they are. And so there's a lot of other things too. What I'm really excited to do, and the technology isn't here yet, but get to a point where rather than the artist say, I don't want this thing for these reasons, be able to deliver something where an artist can make a great version of DALL-E in their style, sell access to that if they want, don't if they don't want, just use it for themselves, or get some sort of economic benefit or otherwise when someone does use their stuff. And it's not just training on their images, it really is it really is about style. And that's the thing that, at least in the artist conversations I've had, that people are super interested in. So for now, it's like, all right, listen to what people don't want. Make sure that we respect that. Of course, you can't make everybody happy, but try to make the community feel like we're being a good partner. But what I think will be better and more exciting is when we can do things that artists are like, that's awesome.
Anna, you are OpenAI's ambassador to Washington, to other capitals around the world. I'm curious what you've taken from your experience at Facebook, what you've taken from the tense relations between a lot of tech companies and governments and regulators over the past few decades, and how you're putting that to use now in OpenAI.
So I think one thing that I really learned working in government, and of course I worked in the White House during the 2016 Russia election interference, and people think that that was the first time we'd ever heard of it. But it was something that we had actually been working on for years and thinking, we know that this happens, what do we do about it? And one thing I never did during that period is go out and talk to the companies, because it's not actually a typical thing you do in government, and was much more rare back then, especially with these emerging tools. And I thought about that a lot as I entered the tech space, that I regretted that, and that I wanted governments to be able to really understand the technology and how the decisions are made by these companies. And also, just honestly, when I first joined OpenAI, no one, of course, had heard of OpenAI in government for the most part. And I thought, every time I used it, I thought, oh my God, if I'd had this for the 8 years I was in the administration, I could have gotten 10 times more done. So for me, it was really, how do I get my colleagues to use it? Especially with OpenAI's mission to make sure these tools benefit everyone. I don't think that'll ever happen unless governments are incorporating it to serve citizens more efficiently and faster. And so this is actually one of the things I've been most excited about, is to just really get governments to use it for everyone's benefit.
I'm hearing a lot of sincerity in that pitch. Are regulators receptive to it? It feels like a lot are coming to the conversation probably with a good deal of skepticism because of past interactions with Silicon Valley.
I think I mostly don't even really get to talk about it, because for the most part, people are interested in governance and regulation. And I think that they know theoretically that there's a lot of benefit. Many governments are not quite ready to incorporate. There are exceptions, obviously, people who are really at the forefront. So it's not, I think often I just don't even really get to that conversation.
It's going to extract you from that conversation at Davos House, at Bloomberg House.
You've been listening to a live conversation, Bloomberg Markets at the World Economic Forum in Davos, Switzerland. Among the participants, OpenAI CEO Sam Altman and the OpenAI Vice President of Global Affairs, Anna Bakanju. They were sitting down for a conversation with Bloomberg's Brad Stone, just wrapping that up in Davos, Switzerland. And that brings us to 11 o'clock. You are listening to Bloomberg Markets. I'm John Tucker along with Jen Ryan, and we're in for Paul and Matt. Jen, hello. The parade of earnings marches on. Goldman Sachs, Morgan Stanley reporting fourth quarter results. Is it too early to declare victory on inflation? Central banks are pushing back, not helping risk assets. We're also hearing from one of the Fed governors. We should get some of those comments in just a few minutes. So let's start off this morning with a market update. And for that, we are joined by Bloomberg's Nathan Hager. Nate?
John, I'll start you off with some red headlines crossing the Bloomberg terminal from Federal Reserve Governor Christopher Waller's prepared remarks, virtual because of the snow here in Washington, D.C., to the Brookings Institution. Waller says the Fed can cut this year if inflation doesn't rebound. He says when cuts begin, it should be methodical and careful. He says there is no reason for the Fed to move as quickly or cut as rapidly as it has in the past. And taking a look at the market reaction, seeing stocks extend some of their declines. DoubleLine Capital Deputy CIO Jeffrey Sherman says this will be the focus for investors, what the Fed does throughout the course of this year.
Looking forward, I think we're going to go back to just looking at the strength of the overall economy. Markets themselves are really focused and very myopically focused on the Federal Reserve today. And I think that's going to be the thing that's going to set the course for markets for the next couple of months, and not really who are these presumed candidates on either side of the equation.
So not as much of a focus for investors on what's happening in politics as it is on the economy and the Fed. And we check the markets all day long here on Bloomberg. Right now, the S&P 500 is down 10 points or 0.2%. 4773 is the S&P level. The Dow Jones Industrial Average is down 174 points or about 0.5% at 37,419. The NASDAQ Composite, little change to the downside, down 10 points at 14,962. But we are seeing a sell-off in treasuries off the back of Governor Waller's comments. The 10-year is now down 28/32, bringing the yield up to 4.04%. The policy-sensitive 2-year is up 9 basis points now at 4.23. NYMEX crude's extending declines, down 1.1% or 78 cents, trading at $71.90 per barrel. COMEX gold is down 0.6%, down $12 even at $2,039.70 per ounce. Dollar strength continues right now, with the euro weaker against the dollar at 1.0869, British pound 1.2643, and the yen up to 147.05. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Jennifer Ryan now.
All right, thanks a lot, Nate. We appreciate it. Let's take a deeper dive into some of those Fed comments. Again, I'm John Tucker, Jen Ryan right here with me, and Steve Matthews is the Bloomberg Federal Reserve reporter. He joins us for a closer look at some of Waller's comments. Certainly market moving, and before the blackout period for the Fed, what's next week? What's the message they're trying to send?
Yeah, the message Chris Waller is trying to send is there's no rush to cut rates. And he's kind of pushing back against the idea that they're going to cut rates in March. He says there's no rush to move. He said they're going to move very carefully. He also warns about the inflation data. He says that, yes, inflation has come down a lot, but, there are sometimes false starts. He points out that all of the CPI data is going to be revised in February, and that last year when there were revisions, what looked like really good data in the second half of the year turned out to be not so great. And there's concern that the revisions could be, a little bit less than great for the Fed. So the kind of message is that, yes, they're going to be data dependent, and yes, they're certainly looking at cuts, but there's no hurry, and they want to be really, really careful. And it's kind of throwing cold water on the idea that they're going to move anytime soon.
Tell me a little bit more about what his worry is about inflation, because, it does seem to be moderating a bit.
It is moderating, and he does kind of do a victory lap in that, 2 years ago he gave a speech saying that, inflation could come down without there being huge damage to the labor market. And, at that time, there were a lot of Fed watchers, including some prominent ones like Larry Summers, who were saying, unemployment rates got to go up really high to bring down inflation. And Waller was pushing against that. But now he's saying they want to see slower growth. They've seen signs of slower growth in the fourth quarter, but they don't want to see accelerating growth. The fear is that if demand picks up too much, that's going to push up price pressures. And they also want to make sure that the data that has come in is not going to be revised away. And, they really want to be careful that they don't want to rush things. That's his message.
Steve, this last mile to 2%, full of fits and starts, it seems. What's your impression?
Yeah, the fits and starts in a way, although it's like last week, the data on CPI was kind of not so great, but then the PPI data was pretty positive. And the Fed looks at the personal consumption expenditures index, PC, which hasn't come out yet, but looks like it's going to be really good for the latest month. So most of the data on inflation has been much better than expected. And in fact, in December, the Fed revised down its forecast for inflation for last year. And so, I think that's what's really driving the idea that they're going to be cutting soon, because if inflation comes down and rates are still at 5.5%, then real interest rates are higher, and real or inflation-adjusted rates are higher, and therefore monetary conditions are tightening. And they don't want to tighten conditions now. They're happy with where they are. So that's the whole idea behind cutting rates, and the data has been generally very good.
Steve, thanks for joining us on such short notice. Bloomberg Federal Reserve reporter Steve Matthews. Again, Chris Waller, the Federal Reserve's saying no reason to move as quickly and cut as rapidly as in the past. I'm John Tucker, along with Jen Ryan. You're listening to Bloomberg Markets. Let's take a deeper dive. Oh, she's been waiting so patiently. Some of the stocks on the move, companies to watch. Bloomberg Equities reporter Jess Minton. Hi, Jess.
So great being here on a Tuesday. Almost said Monday.
It's only
but obviously
Tuesday.
Holiday yesterday, so markets were closed. But I hear Paul Sweeney is off in Aruba.
Aruba, Matt's on wherever he is. We're here.
We're here with the snow. We're very happy to be here.
One thing I would add to expand on this conversation on Christopher Waller, who is a Fed governor, he ended up...
He's a voting member, right?
Well, because he is a governor, correct. So he is a voting member. And he began to kind of temper his hawkishness at the end of November, along with earlier, in recent weeks, we've heard from Mickey Bowman, who's also a Federal Reserve governor, and they kind of leaned more on the hawkish side. So it's interesting hearing, obviously, Christopher Waller pushing back on how many rate cuts, especially in the swap markets, if you're thinking that potentially there could be around 150 basis points starting this spring. He's pushing back against that, but the median dot plot in the Fed's from their last meeting, so these are quarterly, but in the December meeting, it was around 4.6, and he's basically indicating that, and someone like Raphael Bostic actually has been the most precise in
He was over the
regard
weekend
to,
making comments.
yes,
right?
exactly,
Pushing
and
back
he's been
against
more
this
precise
early
in his
cuts.
comments, talking about how he thought that those cuts could potentially begin in the third quarter, but really that would signal there would be 3 potential rate cuts if you are going by the median dot plot projections there. But he's still, with Christopher Waller, he's still saying that if you do see inflation still headed lower here, and even absent that, he still thinks that there's going to be rate cuts there. So if you are looking at the warp function in the terminal, you still haven't seen any sort of dramatic changes from these comments. But I think it's important to note when you have some of these members on the more hawkish tilt from the Fed trajectory here, whether it's Mickey Bowman or Christopher Waller, kind of what their commentary is saying. And they're kind of not quite as hawkish as they had been, but obviously pushing back against and clearly watching the data dependency on inflation, but still changing their tune a little bit and agreeing that potentially we could still see rate cuts in the second half of this year.
The thing I wonder at this point now is, are we leaving it too long, or is the Fed leaving it too long to start the cycle of rate cuts? Because remember, we need to see what corporate earnings look like, having had all these months and months and months of inflation and a big squeeze on their pricing power. And so, you could think that the rate cuts ought to come sooner rather than later.
Well, that would be more, I mean, the economy, though, is still incredibly strong. So the Atlanta Fed GDP model for the fourth quarter, so this can be volatile at times, and we're still waiting on actually retail sales data that's going to come out tomorrow for the month of December. So as more data has come out throughout November as well as December, that as far as what those growth outlooks look like for the fourth quarter, keep ticking a little bit higher. So right now it's around 2.2% growth in the fourth quarter. Obviously, that's not near the close to 5% growth in the third quarter, but that's still pretty resilient growth there, obviously based on what we've been seeing with consumer spending and obviously with the retail sales numbers. So that's going to be important tomorrow to see how that adjusts when it comes to the Atlanta Fed GDP model. But and Goldman Sachs had some interesting data like this, and there's a lot of places that have data on this too, but when you're looking at what the economy is telling you as far as what's going on with the trajectory of rate cuts, typically, obviously, the S&P 500 continues to rise even if there are rate cuts, but those are rate cuts that are not associated, not surprisingly, with a recession, whereas when there are rate cuts that are associated with a recession, maybe if you think of back in early 2001, there were emergency rate cuts. but that was due to concerns about what was going on in the economy. This is a very different situation, so it's hard to use those historical kind of analogies because it's a very different point what's happening here. But to your point with earnings, the big thing, and especially Gina Martin-Adams and her team at Bloomberg Intelligence, our equities team just got off a call with her, and once again she was reiterating, because she's been hammering home the whole idea about corporate margins and especially operating margins, because that feeds into pricing power, to your point, Jennifer, and then obviously the trajectory of what's happening there and the improvements that a lot of companies seen. But there was a little bit of a hiccup, it looks like, in the fourth quarter, and a lot of that was due to more healthcare companies because of certain write-offs that they were going through. So you might see a little bit of a hiccup there. And the whole important thing about operating margins is because that's typically used as a barometer of what the future could mean for stock prices. So even though that hit a bit of a road bump in the fourth quarter, Gina and her team are really curious to see what the outlook is for companies and their guidance moving forward. I mean, that's always, we know, is an important thing with earnings, but particularly so because that feeds into the inflation picture and obviously what that means for operating margins.
So what do you say? The jury's still kind of out as far as how this affects the top line for companies in a disinflationary environment?
So when it comes to like top line sales, that's not something that Gina and her team are exactly worried about now. And especially when you think about
it's more the margins, right?
Right. So it's more, so the Magnificent Seven, even though their earnings growth is expected to narrow compared to the broader index this year, it's still very powerful growth. And a lot of that is coming due to revenue. It's more, to Gina's point, what happens with the rest of the 493 companies and if they can catch up to what the growth has been for these Magnificent Seven companies.
They've been broadening out the picture for the
yes.
S&P 500, right?
Right.
Not beyond the Magnificent Seven, and that was before the start of the new year, right?
That's correct. So the last 2 months of the year, especially when you're looking at small caps, whether you're looking at the Russell 2000, S&P 600, but then also banks in particular as well, especially on the larger bank side, those more value corners of the market had really been supported the last couple of months.
Tell us a little bit about what you're seeing with the bank earnings that we've seen so far.
So I'll point out, I know we were talking about Goldman Sachs earlier, so ticker symbol GS on this, it's up about 2% on pace for its best day since mid-December. So you are seeing that stock did top profit expectations, and really a lot of that was driven to its equities trading unit that posted a jump in revenue that was triple what analysts had expected. So seeing a move there supported there. And then of course Morgan Stanley MS is the ticker symbol on this. The stock's down about 3% on pace for its worst day since October 18th. And if you are looking at that, its wealth business actually soared past expectations even as traders fell short again, so dragging down profits at the firm. But revenue from its fixed income trading business was a little change from a year earlier, so that did disappoint analysts, unfortunately, who had expected an increase. So you are seeing Morgan Stanley a little bit pressured this morning.
And of course, we're always a forward-looking mechanism, so what do they expect for the next quarter?
Right, so that's the big thing too when you are looking at these. So actually, because not just Morgan Stanley, but when you are thinking about a lot of these big banks, and especially the course of the Federal Reserve sort of signaling that it's basically at or close to this peak rate here, bankers are hoping that some of this pent-up demand for mergers and more conductive markets here, hopeful that maybe their investment banking unit could have a bit of a revival there. So especially when you are thinking about banks and deal making, particularly with Goldman Sachs, because that's something that has had a bit of a protracted slowdown for key businesses for that particular bank. That's going to be important to see just exactly how the trajectory of the Fed and a lot of companies, whether you're thinking about companies that are trying to go public or even with deals here, what this could mean for some of these bank moves moving forward.
Let's get back to the data. One of the things, kind of an eye-opener. Yeah, I know manufacturing is in a recession, but the Empire Manufacturing number, maybe a volatile series, but that really was an eye-opener today.
It was.
It was like way beyond what we were expecting on the negative side.
It was. So you do look at the New York Fed's Empire State Index here, plunging in January to its lowest level since the pandemic. And to your point, John Tucker, it has been pretty volatile. But if you look more on a particular components in it on a forward gauge for the next 3 to 6 months, it actually was revised a little bit higher. So some people pointing to that component as maybe a little bit more optimism than just what the headline was showing us.
I wondered if you can read into this at all in terms of what the outlook gives for jobs.
Right, as far as for manufacturing?
Yeah.
Well, this one's a little bit more nuanced since it's more focused to the New York Fed, but that's been a particular gauge when you are looking at like the ISM numbers or the PMI numbers. And Gina's team, Gina Martin-Adams at Bloomberg Intelligence, they watch the manufacturing numbers pretty closely, but a lot of those showing signs of maybe more bottoming out, and sometimes it could be more of like a contrarian indicator from a stock market perspective, but obviously keeping a close eye on that for the read on the economy here. But I think with this latest data, it tends to be a little bit more volatile. So I think people might be reading a little bit too much into it, despite that headline being a little bit more of an eye opener there.
All right, so the Fed's been in the driver's seat for equities. What's up next? Is it the earnings picture? Does that get displaced?
Well, the big thing, especially when you are looking at the consensus estimates for fourth quarter earnings, they're around 1%, and that's come down the last few months. It had originally been around 7%, so that's pretty big drawdown there for those expectations. But you do have different strategists kind of arguing about whether those expectations have been lowered so much. And this is the common thing we always see in earnings season, where you lower the bar and it's more easily able for companies to beat those expectations. But when you look for 2024, it's around 11% growth for the S&P 500. Those estimates haven't really budged too much since last May, so it's going to be interesting to see whether that needs to be rectified for what the earnings growth looks like versus the economic growth.
I just wanted to see how long you could talk. That's a marathon, Jess Menton.
I do what I can.
Fantastic.
You're the best. I'm John Tucker, along with Jen Ryan. We're in for Paul Sweeney and Matt Miller, and you are listening to Bloomberg Markets. Quick look at the markets right now. Still in the red, pairing some of the earlier losses. S&P 500 down just 8 points. Nasdaq Composite Index down 2. And the Dow right now, 185 points lower. This is Bloomberg Radio. And let's get a look at company news right now. And for that, here's Steve Rappaport.
John, prepare for a tough bonus season. That's the message for Deutsche Bank employees from Chief Financial Officer James von Molk.
Look, it'll reflect performance in 23, and as you've seen in a number of different areas of the investment banking business in particular in 23, it had been a difficult market. I think we and our competitors want to pay for performance and work hard in our managing our incentive compensation structures to do that, and that's something we aim to be consistent on.
That's Deutsche Bank CFO James von Molk speaking to Bloomberg Television at the World Economic Forum in Davos. In the market for a new electric vehicle? Well, it's a good month to buy one from Hyundai. Bloomberg's Gina Cervetti explains why.
Hyundai is giving U.S. consumers who buy an electric vehicle as much as $7,500 in cash bonuses through the end of January as it looks to compete with automakers qualifying for U.S. tax credits. The discounts apply to the Ioniq 5, Ioniq 6, and Kona Electric. Hyundai's EVs could not meet the requirements under the Clean Vehicle Tax Credit Program, which aims to encourage domestic production of EVs and parts.
That's Bloomberg's Gina Cervetti. Uber has decided to close down an alcohol delivery service it bought just 3 years ago. The company reportedly bought Drizzly for $1.1 billion, and according to Axios, it was always a bit of an odd match for Uber in that it didn't hire or contract its own delivery workers. The bigger issue might have been cybersecurity. In 2020, Drizzly confirmed a hack that exposed information on more than 2 million of its customers. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets after this.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 11:22 on Wall Street, I'm Nathan Hager. Stocks are falling, bond yields are spiking. We just heard Fed Governor Christopher Waller tell the Brookings Institution that the Fed can cut interest rates this year, but he's emphasizing that the central bank will be methodical and careful with the pace of easing. In the Q&A portion, though, he said if they think they need to move rates down faster, quote, we can. So we check the markets now, as we do all day long here on Bloomberg, and we're seeing stocks sort of pair some of those declines. The S&P 500 right now is down 6 points, or about 0.1%. The Dow Jones Industrial Average is down 168 points. That's a drop of nearly 0.5%. The NASDAQ Composite's been swinging between gains and losses. Now it's little change to the upside, up 7 points. 10-year Treasury is down 23 seconds. The yield now down to 4.02%. It had been as high as 4.03. The 2-year is at 4.19%. 10 of the 11 main industry groups in the S&P are in the red right now. The biggest decliner, energy. We're watching NYMEX crude fall about 0.5%, trading at $72.33 a barrel. The U.S. says it hit 4 Houthi missile sites in Yemen yesterday in a preemptive strike. So more tensions around Red Sea shipping. COMEX gold is down 0.4% at $2,043.30 per ounce. We continue to watch the dollar strengthen this late morning. The euro weaker against the dollar at 1.0892, and the yen now at 146.81. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Jennifer Ryan.
All right, thanks, Nathan Hager. Appreciate that. Let's talk financials now. Goldman Sachs, Morgan Stanley posting earnings, Jen, that beat analyst estimates in some of the key business areas. So let's take a deeper dive now with Chris Whalen. He's the chairman at Whalen Global Advisors. Good to see you again, Chris.
Hey, John. Hey, Jennifer.
First impressions of the earnings so far from the big banks?
I think Morgan Stanley is the best of it so far, both in terms of earnings and revenue. Most of the other banks showed a lot of weakness going into the fourth quarter. Jamie Dimon, for example, record year, went past the record earnings in 21, but fourth quarter was single digits. And what that means is I think the industry is going to have another down quarter. This is 5 quarters in a row of down earnings. So, you know, it's just part of working our way through the last few years of the Fed and everything else. I think you're going to see the Fed end portfolio shrinkage soon, and that means they're going to want to push reserves up and push bank deposits up. So, you know, not bad.
How much equity capital do they? Is that a concern at this point?
No, they're facing market risk, John. It has nothing to do with equity capital unless you're going to sell these securities and write off the loss. You know, think about it this way: Ginnie Mae 3s are around 90 today. So if a bank wants to get rid of them and go buy something with twice the yield, they still have to lose 10 points on the sale. And I think that's still the problem facing a lot of banks. They have assets from 20 and 21 that are, you know, yielding down in 3s, and they should be selling and getting out. Jamie Dimon has done that very astutely. He's taken losses every quarter because he can. He makes a lot of money. But other banks, not so much. And I think you're going to see commercial losses this year, which are going to probably be the headline for banks. Not consumer, really. Consumer is still very quiet.
I guess one thing I wonder, though, is if we do indeed get Fed rate cuts coming as soon as March, how will that help the picture for banks?
On commercial real estate, not at all, because these are very idiosyncratic situations. They're all different. It's not going to help if you've got an office building in downtown Chicago that's not cash flowing. I don't think you're going to see rate cuts in March, to be honest. I think the Fed will stop shrinkage of the portfolio. They'll start reinvesting the runoff from the portfolio. We may not get an actual Fed funds cut until later in the year. So I think that's why financials are selling off today after Waller's comments and some other bits and pieces.
Chris, what does that do to the net interest margins then? What's the expectation there?
Well, yields have been rising very briskly along with funding costs in the past year. but now they've slowed. So what I'm thinking is that we may not see that much headroom. You see all the bond issuance that you guys have been reporting at Bloomberg? Investors are taking that paper as fast as they can get it because I think they realize that rates may be going down. Now, I still think that the Treasury's refunding and the huge cash needs that they have this year is going to pull a long end up eventually, John. That's going to be the surprise, the normal yield curve that we haven't seen in a long time. And I think that is the big question mark in my mind going forward. Short-term rates will probably go down. I think that's a fair bet. But it may go down initially because the Fed is just changing their policy on the balance sheet. They're going to be reinvesting those T-bills back into more T-bills, and it'll pull rates down.
So I guess what do you think from a business perspective is going to be the bright spot for banks going forward? We saw in the Goldman Sachs and in the Morgan Stanley earnings reports this morning a focus on the wealth divisions.
Yeah, wealth is definitely one of the better things to own. Obviously, if you compare Citi with Morgan Stanley was the winner there. Citi does not have that component at all. So that's one of their problems. I think the transactional banks, Goldman, they did pretty well on the trading side this quarter. Will be okay. Credit is the issue for big commercial banks, both in terms of commercial real estate, related business exposures, and then thirdly, consumers. We're all waiting for consumers. But, like I say, credit cards, prime auto by banks is still not that bad. If you look at subprime auto, if you look at lower FICO borrowers in the FHA market, the delinquencies are much higher. And I think that's what people are worried about. They look at that bottom third, bottom quarter of the credit stack, which is definitely seeing stress, but the rest of it, not so much.
Yeah,
so it's a weird picture.
You mentioned consumers, and I think I'm safe, Ian, saying that overall pretty healthy at this point, except when you look at there is stress on the lower level, I'll call it. The deposit balances, do they have less of a cushion?
Well, if you're a commercial bank, a smaller bank, and you've got big losses on your commercial real estate loans, and just commercial in general, you're missing deposits right now. Because if you had to sell those loans, you would take a loss. I think that's what's worrying the Fed. They almost want to force deposits into the system to try and forestall some bank failures this year. And I do think you will see more bank failures this year related to commercial real estate.
But just to go back to the consumer point, I mean, one point that seems to me to be pretty positive is the employment levels are still really, really strong. And I would have thought, from the bank perspective, that could have given them some confidence. But I feel like you're a bit more negative on that.
Well, consumers are not a pain point for banks right now at all. I mean, if you look at residential mortgages, net default rates are still negative. In other words, they can't lose money on 1 to 4 family loans. So if you're looking for problems for banks, it's not where it was last time in 2008. It's in commercial. It's much more like the 70s, the oil patch in Texas. That's what we're facing. You have a whole class of office buildings out there that people don't want anymore. This is a huge problem. We have to redevelop parts of New York City. Look at 3rd Avenue. Nobody wants those buildings from 34th Street up to the 50th.
I can't get up 3rd Avenue in my car anymore. No, they took out the bus lanes. Forget it. Triple parking.
You're not supposed to drive in New York. You're supposed to be healthy, walking.
Before I let you go, JP Morgan, we'll get back to that. Do they manage now to sort of a different standard because they're so darn big at this point? Are they too big?
Well, they have enormous mass. You're right. And Jamie could run that bank on non-interest income. In other words, if you had a horrible recession, he could literally run the bank on fee income and devote all of his interest earnings to loss mitigation. Why does this man need more capital? Obviously, he doesn't. But the regulators, the way I look at Jamie is he's a small country. He has so much liquidity inside that bank. And they also are very astute at managing market risk and duration, unlike some of the other banks. Compare them with Bank of America, which has retained everything from 2020 and 21. Huge mistake. So I think Jamie's he runs a better bank. They're very nimble, and they have all of that interest earning, non-interest side from the investment business, the mutual funds, everything else. It's like a small country.
Then switch over to Jane Fraser, if you could. Citigroup.
Sure.
Is that a completely different institution now? Got about a minute left.
No, I think Jane, frankly, in a falling rate environment, she should break the bank up and sell it. I just don't see any way for her to fix the business model deficiencies, which basically is Smith Barney. They sold Smith Barney to Gorman. He paid for it. Everybody criticized him at the time, but Gorman was right. So Jane has a two-legged stool, and unless she can merge that business with somebody who's got a big investment book and give her some more stability, then I don't know why they're here. I wrote a piece about this on the blog over the weekend.
And we'll leave it there. Good luck getting up. I'm still driving. I'm not walking up 3rd Avenue. Forget that. Chris, always a pleasure. Good to see you. Chairman at Whalen Global Advisors, breaking down some of the bank earnings that we got today. Right now, Jen, a market update pairing some of the earlier losses. S&P 500 right now is 5 points lower. That's down 0.1%. 47.78 on the index. And the Dow Jones Industrial Average down 162 points. That's a decline of about 0.4%. The NASDAQ 100, 43 points higher right now, even as rates go higher. That's up about 0.25%. The 2-year up 5 basis points, 419. The 10-year right now is 8 basis points higher. That is at 4.02%. And you're listening to and watching Bloomberg Markets. I'm John Tucker along with Jen Ryan. Let's get an update of world and national news. And to do that, in the Bloomberg 99.1 studios, here's Amy Morris.
All right, thank you, John. Ukrainian President Vladimir Zelensky condemned Vladimir Putin as a predator, telling an audience of global finance and political leaders that aid to Ukraine is worth the investment. He was speaking at the Economic Forum in Davos. Zelensky says Putin embodies war.
Putin is frank about what he wants, what he does, and who his targets are. His answer to the duration of the war is always war, without an end, and he wants in this way.
Zelensky is in Davos as part of a bid to win backing from more investors to help rebuild Ukraine's battered economy. Donald Trump cemented his front-runner status in the Republican presidential race, finishing nearly 30 points ahead of second-place Ron DeSantis. Now he's pivoting to a general election message.
We're going to rescue our economy. We're going to save our economy. We had the greatest economy in the history of our country. There was never a greater economy, and now we don't.
Some caucus sites hadn't even begun voting before news organizations declared his victory. Turnout in Iowa was around 100,000, the lowest in a decade, thanks to a weekend blizzard and deep freeze. Greg Vallier is chief U.S. policy strategist at AGF Investments.
I think it shows, as a lot of people have commented, that Donald Trump's supporters would walk over broken glass to go to a polling place to vote for Donald Trump. His base is really adamantly in favor of him.
Greg Vallier with AGF Investments, and former UN Ambassador Nikki Haley, who finished a close third in Iowa, is now setting her sights on New Hampshire. She's releasing more ads there today. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Nathan Hager. Bond yields are climbing. Stocks are wavering. That's after Fed Governor Christopher Waller seemed to push back at market expectations that the Fed could start cutting rates as soon as March. Former Fed economist and founder of Som Consulting, Claudia Som, says the market has gotten ahead of itself when it comes to Fed rate cut bets, but she does think there's room for the central bank to come more in line with expectations.
If the data keep coming in as they are, and as they frankly are likely to come in, if they can't get past May without a cut, it's just going to be like, wow, what reality are you living in? They could have enough cover to get to March and signal it strongly, and we could get another verbal cut from Jay Powell like we did in December.
Still, what we're hearing from Fed Governor Waller is that there's no reason to move as quickly or cut as rapidly in the past, with economic activity and labor markets in good shape and inflation coming down gradually to 2%. Off the back of that message, the S&P is down 6 points, or about 0.1%. The Dow Jones Industrial Average is down 168 points. That's a decline of about 0.5%. NASDAQ Composite is just barely in the green, up 4 points. The 10-year Treasury is down 26 30-seconds. The yield close to 4.04%. The 2-year is at 4.21. NYMEX crude's little change now, up 3 cents at $72.71 per barrel. COMEX gold is down 0.7% at $2,036.80 per ounce. The euro weaker against the dollar at 1.0880. Biggest gainer on the S&P is Advanced Micro Devices. It's up 8.75% on a couple of analyst upgrades. Analysts are downgrading Boeing. That stock's down more than 7%. Analysts and customers are concerned that heightened scrutiny of the grounded 737 MAX 9 could mean aircraft deliveries don't come in as quickly. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Jennifer Ryan.
All right. Thanks, Nate. I'm John Tucker, along with Jen. I just want to bring you this red headline from the Bloomberg. GlaxoSmithKline planning to sell about 300 million Haleon shares. As soon as we get any more details, I'll bring that to you. Nathan told you there, the markets right now off the worst levels of the session, still pretty mixed for the major averages. Risk assets still under pressure. You have central banks pushing back against the idea of rate cuts as soon as March. Now let's get the big picture view of markets now. Brad Bernstein, Managing Director at UBS Private Wealth Management, joins us. Good to see you. Thanks for being with us. Appreciate it, Brad.
Thank you so much for having me.
Is the Fed still pretty much in the driver's seat for markets and risk assets in particular?
Oh, I agree with you. Yeah, I think so. I think right now what we're seeing is some walking back a little bit from the Fed, but where we are, we're strongly in the soft landing camp this year. We just changed our projections for Fed cuts this year. We see 4, not 3. We were at 3 recently. Starting in May, 4 quarters this year, and we think markets look pretty good this year with the backing of the Fed changing from last year.
So what's the advice for investors at this point?
Right now, we're advising our clients to add to diversified balanced portfolios. We really like the bond market here, and we like the stock market. We just upped our target also on the S&P for the year to about 5,000. So we see modest, appreciation from these levels. Keep in mind, we were up 10 out of the last 11 weeks. So we probably pulled forward a lot of the year's returns in the last couple of months coming into the new year.
In a deflationary or disinflationary environment, is that necessarily good for company earnings, especially with respect to the top line and margins?
So we're actually thinking earnings are going to pick up this year. So for the quarter that just began in the fourth quarter, we're seeing 4 to 5% year-over-year earnings growth. And for the year, we still see 8% earnings growth, about $240 per share on the S&P this year. Why? We're in that soft landing camp, as I mentioned. We think growth will come down slightly below trend. We think inflation will get to central banks' targets 2 to 2.5% second half, and earnings will be better than I think a lot of people think, and that's why we're saying 5,000 S&P year end, 240 this year. markets look pretty decent at these levels, but we think the bond market looks extremely good at these levels.
Can you dig a little bit into your sector calls for equities? And in particular, can you talk about tech? Where do you see that headed this year?
So tech is our preferred sector for 24 coming into the year. We see the best earnings growth of all the sectors globally is in tech. Why? AI. AI beneficiaries are going to benefit the most from growth. Specifically within tech, we like semis and we like software. Also, we're adding a modest overweight right now to small cap.
Why small cap?
Multiple reasons. Number one, for the first time in a few years, we think it can outperform large. Why? Because they are going to be one of the better beneficiaries of declining rates. They're more levered to borrowing than large companies, clearly. Also, the valuation compared to large hasn't been this compelling in a long time. And the small cap asset class was really impacted by the regional banking crisis we had in the spring. And that has hurt the index, and it's still off 10 to 15% since March of last year. So we think there's a lot of reasons why small cap could actually outperform large cap this year.
You also mentioned bonds. What, the 10-year 4.03%? I mean, Jen and I missed the boat at 5%, but just over 4%. Is that still a screaming buy?
Yeah. Yes. November was the best month for bonds since the 1980s. Right after bonds being terrible for a year and a half. We see the 10-year getting a 3.5 by the end of the year. So we really like the bond market. We think the risk reward looks outstanding. The conversations we're having right now with clients are, everyone has too much in cash these days. Cash yields are going to decline as the Fed cuts. We see 4 cuts, as I said. So that 5-something money market will be 4-something by the end of the year, maybe 3-something next year. And yet there's opportunity to lock in duration. So for the liquid cash that's sitting in money markets that shouldn't be, it is still time to get in, and there's still upside in the bond market, not to mention locking in yields that won't be available 6 to 12 months from now.
He sounds like a 60-40 guy. Are you? What's your allocation? What's the ideal allocation if I'm your client?
It depends on you, the client, right? So we're agnostic when it comes to the strategic allocation of a portfolio. It's always about the client's goals and objectives. It's always about what the goals are for the portfolio. That dictates what the allocation will look like. But yeah, we believe at a high level in diversification and owning, broad diversity within a portfolio, such as small, mid, large caps, and then overweighting areas within those areas. And then within fixed income, we like duration here, specifically to get into more detail, municipals, high quality investment grade, and CMBS here.
What's the biggest risk to your outlook? Is it geopolitical risks? Is it the Fed not proceeding as you expect?
I think number one would be the Fed disappointing and not delivering what the markets really hope. Now, obviously, right now, the Fed, I think the market's ahead of the Fed a little bit. I think we're not going to get 6 cuts. We'll probably get 4. That's what we're projecting. And I think the markets will be fine in that scenario. But if we get 2 or less cuts, I think the markets would not be happy about that. And then obviously overnight we saw, some escalation globally with some geopolitical risks. Hopefully those don't get worse as long as I think, geopolitical risks don't get much worse with the United States, our military and oil being impacted. I think we'll be fine as well. And that's our base case that won't happen.
Always a pleasure. Brad Bernstein, Managing Director at UBS Private Wealth Management. Just to recap, so year-end, 5,000 S&P 500, 4 rate cuts from the Federal Reserve in May, and earnings growth of something like, 4 to 5%. Always good to talk to you, Brad. Thanks very much. We appreciate it. As we look at the markets right now, S&P 500 is 10 points lower. That's down 0.2%, 4773 on the index. So the number to watch, 4796, that would be the record that we set from 2 years ago. So 20 points, a little more than 20 points away from that, Jen. Dow Jones Industrial Average, 175 points lower at this point. The NASDAQ 100, that is in the green. That is up 8 points right now, up about 0.1%. You're listening to Bloomberg Markets. And that brings us to 11:50 on Wall Street. Let's get an update on company news. And with that, here's Steve Rappaport.
John, this decision could mean a supreme setback for Apple. Bloomberg's Erica Herskowitz reports.
The U.S. Supreme Court refused to consider Apple's appeal in an antitrust suit challenging its lucrative App Store, a decision that will likely affect billions of dollars in revenue for the iPhone maker. Both Apple and Fortnite maker Epic Games had asked the court to hear an appeal related to the case. The justices turned down both without explanation. The High Court's decision will allow an appeals court ruling go into effect that lets developers direct iPhone users to cheaper purchasing options outside of Apple's system. The company charges developers a commission of as much as 30% for digital goods and services sold through its Apple Store. Erica Herskowitz, Bloomberg Radio.
Elon Musk is putting pressure on Tesla's board for a bigger payday. Bloomberg's Jeff Bellinger with the story.
Steve, Musk is looking for a massive performance award to boost his stake in the electric car company. He sold about $40 billion worth of his Tesla stock in 2022 to raise the money he needed to buy Twitter. That left him with a Tesla stake of around 13%. Musk is still Tesla's biggest shareholder, but he told the board that unless he has close to 25% of the company, he might prefer to build artificial intelligence products and robots elsewhere. Steve?
Thanks, Jeff. The owner of Burger King plans to buy Carroll's Restaurant Group for about $1 billion in cash in a bid to fast-track an overhaul of hundreds of locations and win back customers. Restaurant Brands International expects to complete the deal by the second quarter. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And I'm John Tucker along with Jen Ryan. We're in for Matt and Paul. And right now, 11:55 on Wall Street. Let's get an update. News from around the world. And for that, we head to the Bloomberg 99.1 newsroom. That's where we find Amy Morris. Hi, Amy.
Hi, John. Thanks so much. Ukrainian President Volodymyr Zelensky met some of the biggest names in global finances. He's trying to bolster wavering support for his country's fight against Russia. He stopped to shake hands with Philip Hildebrand of BlackRock, Bridgewater's Ray Dalio, Steve Schwarzman of Blackstone, and had this exchange with Jamie Dimon of JP Morgan Chase.
We're so happy. Jamie Dimon, JP Morgan Chase. God bless you. Thank you so much.
This was the first time Zelensky has come to the World Economic Forum since the Russian invasion. Donald Trump won a decisive victory in Iowa, with Ron DeSantis coming in second, Nikki Haley in third place. Now, fresh off of his victory, Trump is set to face a New York jury this week in the next high-stakes trial, a defamation lawsuit by writer E. Jean Carroll, who claims he raped her in the 1990s. The judge overseeing the case has already held Trump liable for defaming Carroll, leaving it for a jury to decide how much damages he must pay. Plunging temperatures gripping much of the nation in the east and the south, possibly dangerous storms bringing snow, sleet, and freezing rain. More now with Bloomberg meteorologist Rob Carolyn.
An area of low pressure passing southeast of New England this afternoon will keep snow going across much of southern New England and also across upstate New York. Looks like accumulations across New England will average an additional inch along the coast, where there'll be a changeover to rain during the afternoon. Inland locations could see an additional 2 to 4 inches of snow on top of the inch and a half they've already received. Good news is the storm will head into the Gulf of Maine during the evening. That should bring the snow to an end. Colder and clearer weather will develop across the Northeast and Mid-Atlantic for tomorrow.
Bloomberg meteorologist Rob Carolyn there. 3 shows dominated the Emmys last night. The HBO drama Succession won 6 awards, including Best Drama Series. FX's The Bear won Best Comedy and several acting honors. Netflix limited series Beef won 5 trophies. Quinta Brunson's win for comedy was the first for a female black actor in more than 40 years. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John.
Amy, thanks very much. I'm John Tucker, along with Jen Ryan. We're in for Paul and Matt. You are listening to Bloomberg Markets. One of the stories that I was doing this morning at the beginning, retirement savers putting more money into stocks, and that has a number of implications. This is a survey that we occasionally do, the MLI Pulse survey is what we call for Bloomberg News.
It's a very interesting result because what we've got is, of the 252 respondents, 46% that said they were adding more stocks, 19% said I'm not doing anything, and 6% said I'm adding more gold.
And this is sort of well, I don't want to say hedge, but it's a response to the inflationary environment. The thing is, you would expect some of the more traditional inflation hedges. Here, those that we surveyed said it's going into stocks at this point, the riskier assets.
Yeah, this is not to say that they are correct, because if you remember the 1970s, which...
And I do, actually. You don't. You're too young.
I do not. I regret to say. Stocks were the worst performing asset in those inflationary times.
So, I mean, you know, the past doesn't necessarily mean precedent for the future. I remember telling the old man in the 70s, buy gold, buy gold. And he could buy gold because he was a dentist. So if, you know, it didn't work out as investment, he could always melt it down and put it into people's mouths. Did he listen? Of course not.
Of course not.
All right. So this potentially, if this survey is correct, at least in terms of predicting what investors are going to do for the future, could give another leg higher for risk assets like stocks.
It could definitely give another leg higher. And then you would think, though, with rates falling, you know, they're getting quite a lot of help there. And you wonder, is it going to get a little bit overdone?
All right. Well, that remains to be seen. Jen, thanks. S&P 500 now 16 points lower. That is down about 0.3%, 47.67 on the index. The 2-year yield, 7 basis points higher. Did have some Fed speak today. That's lifting rates right now. The 10-year, the benchmark, that's up 10 basis points. You're listening to Bloomberg Markets. John Tucker along with Jen Ryan. Bloomberg Markets continues right now.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And, well, good afternoon now. It's just across noon. This is Bloomberg Markets. I'm John Tucker, along with Jen Ryan, and we're in for Paul Sweeney and Matt Miller today. The event of the day, well, one of the events of the day seems to be Fed Governor Chris Waller speaking on the economic outlook as well as economic policy. Also got bank earnings. This all comes as central banks have been pushing back on some of the rate cut expectations. And the market's optimistic view on rate cuts, that took also a bit of a dent over the weekend. That's when we heard from the Atlanta president, Raphael Bostic, saying he favors waiting until summer before cutting rates. So just add that voice to the number of voices speaking out on rates. First, let's get a markets update. And for that, we turn to Bloomberg's Charlie Pellet. Hi, Charlie.
Thank you very much, John. Thank you very much, Jim. We have got the Dow, the S&P, NASDAQ all in the red. Back to work Tuesday, holiday shortened trading week. Bond yields rose, stocks wavered on speculation. Wall Street's bets on aggressive Fed rate cuts have gone too far. Traders remain on the lookout for comments from policymakers. Fed Governor Christopher Waller appearing to push back against market expectations for as many as 6 rate cuts this year. Right now, we have got the 10-year yielding 4.04% with a 2-year 4.22%. Spot gold is trading lower by $23 the ounce, now at $2,032, down 1.1%. Bitcoin up 1.2%, 43,182 on Bitcoin. Equities lower across the board. S&P down 16, drop there of 0.3%. The Dow down 200, drop there of 0.5%. Nasdaq down 0.2%, and the Nasdaq 100 index trading lower now by 0.1%. Bitcoin, as we mentioned, up 1.1%, 43,173. Well, as for the inflation outlook, Marianne Bartels is chief investment strategist at Sanctuary Investments, and she spoke about the trajectory for inflation this morning with our John Tucker.
So the momentum is definitely to the downside. So despite that slight uptick in CPI, we still think the trend is down. And as you pointed out with PPI, which is really not getting a lot of attention, on a year-to-year basis, it's actually negative. So we've already seen the producer prices come down dramatically. And we think over time you're going to see CPI do the same thing.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Goldman Sachs reported profit that topped estimates this morning. Goldman Sachs shares are up now by 1.6%. Also out with earnings this morning, Morgan Stanley, its wealth business surged past expectations, even as traders fell short again, dragging down profits at the firm. Morgan Stanley down now by 3.8%. Recapping, stocks are lower. S&P down 18, down now by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. I'm John Tucker along with Jen Ryan. Time now to take a look under the hood. Companies and stocks, some of the specifics on the move today. And you got to put on, I guess you got to put on your lawyer's hat. Nora Melinda joins us now because we're looking at Apple and a Supreme Court case.
A lot going on there. Apple is 2.7% lower, as much as 2.7%, after the U.S. Supreme Court refused to consider its appeal in an antitrust suit that has been challenging its lucrative App Store. So this is some really interesting content going on. This decision will likely affect billions of dollars in revenue for the iPhone maker. Both Apple and Epic Games, which makes the video game Fortnite, asked the court to hear an appeal related to the case, and both appeals were turned down without much of an explanation from the Supreme Court justices.
So it's not been a great time for Apple in the law courts because they're now also removing a blood oxygen feature from their latest smartwatches. That's a Series 9 Ultra 2. That's to get around a U.S. ban stemming from a patent dispute. So this
Wait
is...
a second. Why do I want a blood app on my... what? This measures what? Your oxygen
Your blood
level?
oxygen. Your blood oxygen.
Which is important because
it is indeed.
Remember, if you don't have a...
You will remember the pandemic. We were very interested in our blood oxygen readings, unless that had passed you by. I don't know, John.
Well, no, I had hospitalized for a breathing problem, for pneumonia. And you know what? They were taking my blood oxygen level, and it was like, oh, give them more oxygen.
Goodness.
But I'm here with you guys, so that now.
Thankfully.
So it all worked out.
It all worked out.
I didn't have my Apple Watch to tell me I couldn't breathe.
But I know you used to cover like the tech space and everything. So this is a lot going on right now for Apple.
It's a lot for Apple.
Yes, and I'm sure you know as you've watched kind of the evolution of all this happening. But this decision apparently will now allow developers to direct iPhone users to cheaper purchasing options outside of Apple's system.
But putting that all together, it's not a happy experience for Apple at this point.
Not at all. Not at all.
All right, let's move on. Deal news. Ding, ding, ding,
yes, M&A. Gotta love it.
Merger Monday? Well, it's Tuesday. But.
Let's call it Merger Monday.
It can still work.
Anyway.
It can still work. I'll take it. So looking at Synopsys here, and additionally Ansys, Synopsys is headed for its biggest intraday gain since August, and similarly, Ansys is headed for its biggest intraday drop since November. This is one of the most read stories of the day. The chip design company Synopsys agreed to buy the software developer Ansys for about $34 billion in cash and stock. This is marking one of the largest deals announced worldwide in the past year.
So what makes this story of such interest to Bloomberg readers? Is it the tech that's at play here with this merger, or is it the fact that we've got a jumbo acquisition and we would, in a lot of places, would really like to see deals revive?
I mean, it's exactly both. Tech has really been in focus as we were going through 2023 and into 2024. Everyone's really interested to see what's going on in this space and whether it will continue to evolve. But as you mentioned, M&A has really just been something that investors have been craving. It's really like something that they're super excited to see. And for this to be one of the largest deals worldwide, it's got investors pretty excited.
All right, let's wrap up with AMD. That's got a nice pop here.
Yes, keeping in the tech space. AMD is the biggest gainer in the S&P 500 right now. It's at its highest intraday level in more than 2 years. That's since December of 2021. The chipmaker is soaring and outperforming the stocks index after a couple analysts lifted their price targets on the stock, citing potential forward growth. Barclays did raise its price target on the stock to $200 from $120, seeing AI as a primary driver of growth.
So it's all about the AI race, isn't it?
It is, and it's about who can keep up and who's leading.
I know. This is going to be the big thing for the Magnificent Seven this year.
When do we say with AI, I mean, what are we looking for? The sales growth, the potential for its economic impact in terms of productivity? When does that all gel, or is it already?
I mean, I think all of these things are separately in focus. Depends exactly on who you ask. But while NVIDIA has had a lead in AI, Barclays says that it believes the desire to have a second source will ultimately outperform or overwhelm difficulties for the software ecosystem.
You know, it'll be interesting. I take your point, John, because when's it all going to gel? And a lot of this is going to come down to company investment.
Definitely.
It's all a matter of getting companies to say that these are products that we need to have, and they've got to have the money to spend on that.
All right, you can go back to the dot-com bubble. I mean, there's no comparison, or is there, in terms of the hype?
You would not have been the first person to have noticed the similarities between. No, but it's worth noting, because the question is, we will have hopefully learned our lesson from the dot-com hype cycle. And the question is, you know, are we being modern enough this time around?
Mm-hmm.
I don't think Nora was born yet. Nora Melinda. That's a compliment.
Exposing me.
No, that's a compliment. Appreciate it. All right, Nora Melinda with some of the stocks. A look under the hood for the markets right now. Let's move ahead. Lot to talk about on the economic front. Their Fed rate expectations. We had some Fed speak. I think next week they're in a blackout period, the Fed officials, so they're getting all their comments in. Let's take a deeper dive into this front right now. Bloomberg International Economics and Policy Correspondent Mike McKee is with us in studio. Good to see you. What did we learn today from the Fed speakers, Mr. Waller in particular?
Yeah, Chris Waller speaking today. He's essentially become the go-to voice for where people think policy might be headed. And he said the Fed could be cutting rates this year, which is not a surprise. A lot of people have said that. But he pushed back against the idea of earlier and deeper. The 6 rate cut thing is not going to work. He said we should probably be cutting at a slower pace than we have in the past because we want to make sure that inflation is taken care of. And he said that basically how fast they do it and how soon it starts will be data dependent. That part not new either, but the pushback against the number of cuts caught a lot of people's attention, and we did see some big moves in the bond market.
So tell me sort of bigger picture here, Mike. What's the sense for inflation to come back quickly to target? I mean, we're seeing movement into stocks. We're seeing a lot of optimism and enthusiasm that we're going to have not only a soft landing, but maybe even something a little bit better. But against that, you look at geopolitical risks and you look at what's happening in the Middle East. You know, the supply chain picture is getting more and more complicated. Where does that leave the inflation picture?
Well, the inflation picture, according to Chris Waller, is getting much better. He was looking at the CPI numbers and taking, rather than the year-over-year numbers, looking at 3-month and 6-month moving averages and pointing out that they're going lower constantly, even though we saw a little bit of a rise in the headline CPI for last month. And he noted that the PCE, which is what the Fed follows and generally runs a couple of basis points lower than CPI, that the PCE was forecast to come in the 2s. And so he's thinking that they're definitely on their way. Nobody's making an exact prediction because so many things can influence. One of the questions he got was about the Red Sea and whether that's going to influence inflation. And he said he didn't think so. And most of the economic research suggested it won't. But if they move to the other side of the Saudi Peninsula and hit the Strait of Hormuz and oil prices go skyrocketing, it could all change.
I thought the question was, can you part the Red Sea? Anyway, the data that we got today, it was the New York series on manufacturing. We do know that manufacturing is in recession, so maybe no surprise there. But that was still an eye-opener, that data. Maybe a little notorious for how much it fluctuates. But what was the reading on that?
Well, the numbers came in the worst since May of 2020. The Empire manufacturing number down to negative 43.7, and new orders was negative 49. Those have been historically fairly volatile numbers. They go up and down, and so there's some feeling that maybe you dismiss that. We'll see what we get Philly Fed later this week, and then we start to get some of the others, and we'll see if they all follow the same pattern or if this is truly an outlier. The interesting thing was you look at the headline number and the new orders number and you say, oh, well, that means they should cut rates because manufacturing is terrible. But then you look at the prices paid number and it went up. So then you're getting pushback. So this is kind of a tertiary indicator. It moved markets today because there wasn't anything else, and traders got to trade. But it's not really something I don't think that people are going to take as a significant signal of the economy.
So can you tell me what we're learning, from last week, what you're expecting ahead this week about the jobs market? Because I'm very interested to see how the labor market holds up and how that interplays with the changes in prices.
Well, Waller talked about that as well. He said they've got to start focusing more now on making sure that unemployment doesn't go skyrocketing as they keep rates higher for longer. He noted that he took a sort of victory lap for saying 2 years ago we could absorb the higher rates through vacancies rather than a higher unemployment rate. But now they want to be more careful. The question is, do they need to be? Because we keep seeing jobs come in stronger than anticipated, and the unemployment rate has stayed very low. He thinks that's going to turn around and that we will start to see some moderation in job gains and that unemployment could go up, noting the revisions that we have seen. 9 out of the last 10 months, the jobs numbers have been revised lower. So he's thinking that that's going to happen. But right now, the Fed can't be sure, which again feeds into this whole how long do we wait issue.
Retail sales, that's not a tertiary number. What is the expectation? We get that, tomorrow morning?
Retail sales interesting. It is a major number. We want to see whether the consumer's hanging in, and of course, everybody wants to know how the holidays went. The advance number is supposed to go up, according to our survey of economists, 0.4 after 0.3 in November, but the control group is expected to be halved to 0.2 from 0.4. Control is you take out autos, gas, and building materials.
I don't even know is that good news or bad news? Or is that inflationary or not?
Well, you got a lot of factors. You got a lot of factors that are involved in this. These are nominal numbers.
Okay.
So you do have to, if you want to figure out what's going on, look at inflation adjusted. And if you are adjusting for inflation, if inflation's coming down, your numbers are going to be lower anyway. But because gasoline prices have fallen and car sales and building materials are accounted for differently in GDP, everybody looks at the control group to get a picture of how things went during the month. Interestingly enough, the Chicago Fed put out for years a retail sales advance number based on a whole different bunch of calculations that they did. And they had to suspend it in 2022 following the pandemic. They weren't getting the right data. They're bringing it back, and it's technically going to start next month, but they put out a preliminary December number that shows twice as much growth in the control group. So maybe there's some hope out there.
So is there still going to be the willingness for consumers to spend? They've got a job, inflation's coming back down.
That's kind of the bet, that the consumer's going to spend and not dry up completely, but they are going to be spending less. Waller said today he sees growth this year somewhere between 1% and 2%, which is not, as he pointed out, a recession, but it's much slower than it was in 2023. And consumer spending is the biggest part of that.
Mike, thanks for stopping by on short notice. Appreciate it.
Always happy.
I mean, he explains everything, right?
Yeah, it's great. You always learn something when Mike's around.
Bloomberg International Economics and Policy. We're buttering you up so you show up next time on short notice. Mike McKee. And as we look at the markets right now, the S&P 500, 19 points lower right now. That's down 0.4%. 47.65 on the index. The Dow Jones Industrial Average down 232 points. That's a decline right now of 0.6%. 37,362 on the index. And the NASDAQ 100, that has turned lower. That's now down 27 points. That is down 0.2%. As far as yields go, the 10-year, that's a bit of a pop there, 12 basis points higher. That's up to 4.06%. And the more policy reactive 2-year, that is up 9 basis points at 4.23. You are listening to Bloomberg Markets. I'm John Tucker, along with Jen Ryan. And that brings us to 12:18 on Wall Street. Let's get an update on company news. And with that, here's Steve Rappaport.
John, Apple is taking steps to get around a U.S. ban of its latest smartwatches should an appeal fail. Bloomberg's Mark Gurman reports.
It is an incredibly dramatic step, the idea of Apple removing a feature from its devices in order to avoid this continued litigation over their patents with Massimo. Apple is hoping that the U.S. Federal Appeals Court, that circuit, will rule in its favor to have a 1-year stay on this issue. That would mean the Apple Watch with blood oxygen can continue to be sold for the next year or so without the company having to roll out that new software that removes the feature.
That's Bloomberg's Mark Gurman. In another legal setback for Apple, the Supreme Court refused to hear the company's appeal in an antitrust case challenging its lucrative App Store. Hyundai is greasing the wheels to boost EV sales. Bloomberg's Gina Cervetti has more.
Hyundai is giving U.S. consumers who buy an electric vehicle as much as $7,500 in cash bonuses through the end of January as it looks to compete with automakers qualifying for U.S. tax credits. The discounts apply to the Ioniq 5, Ioniq 6, and Kona Electric. Hyundai's EVs could not meet the requirements under the Clean Vehicle Tax Credit Program, which aims to encourage domestic production of EVs and parts.
That's Bloomberg's Gina Cervetti. The National Football League sets a live stream record. According to Comcast, Saturday's playoff game between the Kansas City Chiefs and the Miami Dolphins was the most streamed live event in U.S. history. The game was carried exclusively on the Peacock network outside of the Miami and KC markets. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and the Russell 2000 very much in the red. Back to work Tuesday with the S&P now down 0.4%, lower by 19, drop there. Again, 0.4%, down 19. We have got the S&P right now 47.64. Dow Industrials down 230, drop there of 0.6%. NASDAQ 100 index down 28, decline of 0.2%. The NASDAQ Composite Index lower now by 0.3%. 10-year 4.06% with a 2-year that's yielding 4.23%. Spot gold down $28 the ounce now at $2,028, drop there of 1.4%. And West Texas Intermediate crude oil down 0.8%, $72.08 a barrel. Bonds rose, stocks fell on speculation that Wall Street's bets on aggressive Fed rate cuts have gone too far. Deal news, chip design company Synopsys has agreed to acquire software developer Ansys for about $35 billion in enterprise value. Right now, we do have shares of Synopsys. They are trading lower on the news, down now by 1.1%. Shares of Ansys lower by 5.4%. The other deal today, the owner of Burger King Restaurant Brands International plans to buy its largest American franchisee for about $1 billion in cash. Again, recapping, stocks lower, S&P down 19, drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks, Charlie. I'm John Tucker, along with Jen Ryan. We're in for Paul and Matt today. You're listening to Bloomberg Markets. Well, as Charlie said, the risk assets somewhat under pressure today as we have bond yields rising. We can blame Mr. Waller for that, perhaps. Let's bring in our next guest to look at the markets. Mike Mullaney is Director of Global Markets Research for Boston Partners. He's got the shades closed behind him, so I don't know where he is. I'm guessing Boston, right? Did you get snow?
Correct, yeah, and it's snowing outside still here, so.
All right, well, it's let up, so maybe you'll get some relief in a couple of hours. Are you a 60-40 guy at this point?
Yeah, we would be definitely. Actually, we have still a smattering of balanced accounts here at Boston Partners, and the balanced neutral ratio is 50-50. And currently, we're at 55-45 stocks to bonds. So we are still leaning towards overweight stocks versus bonds in our portfolios.
So tell me, what's your take on what the Fed's next move is, and more importantly, when it's going to come?
Well, I thought, Waller today was less dovish than obviously the market anticipated. And I think that's why we're seeing the negative action in the Treasury market, which is spilling over now to the equity market. And we're not in the camp that it's going to be a March cut. We just think that's too early because haven't seen, I guess you can say, sustained improvement on the core PCE that would be necessary to be more aggressive on cuts. Doesn't mean they don't cut, 3 times or perhaps 4 times in 2024, but we think it's later in the year as compared to starting in March.
All right, but still, the trajectory is a disinflationary path or outright deflation in some sectors, I would imagine. How does that add up for earnings?
I go back actually to a macro standpoint on earnings. And earnings I do based upon, if you do a trickle-down effect, you start with nominal GDP, then you look at revenues of the S&P 500, and you wind up with earnings. And the quandary that we have for 2024 is nominal GDP is supposed to drop from 6.5% in 2023 to about 3.5% in 2024. Yet revenue growth is supposed to be in the mid-teens going forward for 2024. And there's a 99% correlation between nominal GDP and revenues of the S&P 500. So you got two things going potentially in the opposite direction, which is somewhat confounding to us. And if you continue that, earnings are very much linked towards revenue, about a 97% between S&P 500 earnings and S&P 500 revenue. So if revenue is going to slow, which is what we think the case is going to be, we don't think it's going to be as high as probably what the analysts are forecasting or the strategists are forecasting right now, then we do think there's probably going to be some pressure on earnings not to attain that 11.8% growth for 2024, which is the current consensus forecast for the S&P 500. We think it's going to be something less than that.
So do companies have the wherewithal to weather that kind of slowdown, without taking measures such as shedding some jobs?
We're beginning to see jobs being shed, especially in the larger corporations. The announced layoffs now that are coming in more in a fevered pace. That wouldn't surprise us to see that continuing in 2024. Obviously Citigroup last week, stating they're going to cut, 20,000 employees during the course of this year, or the next couple of years. We think that's probably going to be more the norm because I think first and foremost, what's going to happen is that companies are going to try to protect their profit margins, which are very high right now, but they are getting pressure from wages. Wages have remained sticky at a high level. And that is beginning to erode some of the prospects for profit margin expansion, obviously, in 2024, and maybe cause some contraction in 2024, which ultimately will impact earnings.
If you can't talk individual stocks, what about sectors? What do you like?
You have to still like tech. If you look at where the earnings growth is supposed to be in 2024, tech is still coming in second place. And, you don't want to chase the, necessarily some of the multiples of the Magnificent Seven, but, other companies in that sector still are priced at reasonable levels. So I think tech is still a place to be. And you may want to try to barbell it. If you do see kind of a no landing scenario for the economy, and we think it's almost a jump call between recession and no landing, quite frankly. But if you do see a no landing, then some of the cyclical sectors probably do better. Energy has been beaten down badly, and deservedly so based upon the weakness in energy prices. But they have, once again, a negative prospect for earnings per share growth for 2024. And based upon what you just said, given what's going on in the Middle East right now, you might see some firming of energy prices just on geopolitical risk. And if that's the case, you'll see the earnings come through better for energy companies in 2024. So that would be a typical kind of barbell, tech and energy, and play both sides of the card.
What is your take on how the U.S. election will play into things in the second half of the year?
That's a really good question. So generally the market's pretty choppy in the first half of the year, particularly in the first quarter in an election year. And you see that until you get more definitive, kind of vision as to who the candidates are going to be and what their platforms are into the election. My guess is right now, you got to think that once again Donald Trump would be the favorite right now, based upon either polls or the betting markets right now. Trump is ahead of Biden. We see probably the market doing well if that's the case, because the market seems to like obviously reduction in taxes, which is what Trump has obviously championed in the past. But I'm not so sure after the election, with some of the things that he's put forth as far as his next administration, what he intends to do, are going to play all that well in the market continuing into 2025. But I would guess that the market would be relatively firm going into the election and just out of the election as well.
All right, conventional wisdom dictates the Fed stays away from politics, so stays away from any sort of decision around election time. I think you said, what, March is too early, so when do they act?
Well, I would imagine they're going to try to do it around when they're releasing statements, formal statements in the summary of economic projections. So I would put it probably out we'd have it at the June meeting. It starts with June. And they could go every meeting after that if they continue to get the kind of progress on core PCE that they've seen so far. The 6-month annualized rate right now is basically pretty close to what their target is. So if they continue to see that kind of progress, I think you could see them go every meeting once they start in June, albeit if we don't get a reacceleration in inflation, which is still a little bit of a wild card because, quite frankly, if you look at super core PCE, which is one of Chairman Powell's favorite indicators, that's still very sticky at a high level, and it's very much influenced by wages, and wages are showing no sign right now, basically, of collapsing at this juncture.
Wages are not collapsing, and the labor market's quite strong. So where does that leave us with the outlook for consumer spending? I wonder how rich consumers are feeling. They're just coming off the holidays and a massive spending binge, which, looking at my gift haul, was not what I had expected. But still, I know. But, you could think that, they're going to be pulling back a little bit.
I think it's very bifurcated. I think that, the upper echelons, whether it be the top quintile or the top 40% of wage earners, are going to be perfectly fine. But the bottom 20%, the bottom quintile, definitely is beginning to struggle right now. If you look at delinquencies and defaults and the increase in credit card balances, it seems to me that they're beginning to borrow to maintain lifestyle. So I would think that the lower quintile is going to be basically in a somewhat of a struggling situation. That's more goods related than it is services related. The upper two quintiles obviously are going to continue to spend on services. I think they're going to continue to spend on experiences in 2024, much like they did in the mid to latter part of 2023.
All right, Mike, thanks. Appreciate it. Mike Mullaney from Boston, Director of Global Markets for Boston Research, Global Markets Research, I should say. Some of the takeaways, jump ball between recession and no landing for the U.S. economy. March a little too early, so he expects the cuts to start in June. As we look at the markets right now, Jan, the S&P 500, 25 points lower. That's down 0.5%. The Dow, 277 points lower. And right now, the NASDAQ 100 down 58 points. This is Bloomberg Markets.
Markets, headlines, and breaking news.
And that brings us to 12:33 on Bloomberg Markets. John Tucker along with Jen Ryan. Let's get an update on news from around the world now. And for that, we head to Bloomberg's
24 hours a
99.1 newsroom in Washington. And Nancy Lyons. Hi, Nance.
Hey, John, thanks. Donald Trump took a decisive victory in last night's Iowa caucuses, but that does not mean he's locked up the Republican nomination yet. That's according to Wendy Schiller of Brown University's Taubman Center for American Politics and Policy.
The question is, what does Iowa tell us about the general election? And I would say it's less relevant, given its demographics, than it used to be in a big way. So that's the big question mark for the Republican Party. As Trump sails, if that's what people think will happen, what is that going to do to the Republican Party nationally? Does it make him more electable in the general election?
Wendy Schiller of Brown University was a guest on Bloomberg Daybreak. Fresh off his victory in the Iowa Republican caucuses, Donald Trump is spending his day in a Manhattan courtroom for the next high-stakes trial of his crowded legal calendar. This time it's a defamation lawsuit by writer E. Jean Carroll, who claims he raped her in the 1990s. The judge overseeing the case has already held Trump liable for defaming Carroll, leaving it to a jury to decide how much in damages he must pay. The deadline for funding the federal government is this weekend. Lawmakers plan to extend stopgap measure into March, but that puts House Speaker Mike Johnson in a perilous position. We get more from Amy Morris.
The Senate Appropriations Committee has a continuing resolution to extend funding through March 1st for some agencies, March 8th for others. And senators plan to vote today on cloture on the motion to move forward on the bill. But before lawmakers can negotiate the specifics of a final funding deal, top lawmakers still need a framework for all 12 annual appropriations bills.
Again, that's Amy Morris reporting. Global news 24 hours a day, whenever you want it, with Bloomberg News Now.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, and NASDAQ very much in the red. Russell 2000 as well. We begin there. It is down by 1%. NASDAQ lower now by 60 points, down 0.4%. It's the NASDAQ 100 index is down 43 points now, dropped there also of 0.4%. S&P down 22, a decline of 0.5%. Dow Industrials down 267, a decline of 0.7%. Bond yields rose, stocks fell on speculation. Wall Street's bets on aggressive Fed rate cuts have gone too far. Traders remain on the lookout for comments from policymakers, with Fed Governor Christopher Waller appearing to push back against market expectations for as many as 6 rate cuts this year. So what about the geopolitical backdrop and what that means for markets? Julia Coronado is the president and founder of Macro Policy Perspectives, and she was interviewed this morning on Surveillance by our Tom Keene.
Economies are very resilient. They tend to function throughout a lot of disruptions, right? So will this be a material disruptor to have shipping, rerouted around Africa, at least temporarily? Will these skirmishes turn into something that's a broader conflict that interrupts global commerce? That remains to be seen. And right now the market is saying probably not.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Specifically on crude oil, down now by 0.8%, $72.12 for a barrel of West Texas Intermediate crude. Among this morning's earnings reports, we heard from Goldman Sachs. That stock up now by 1%. Morgan Stanley shares after earnings down now by 4.1%. Recapping stocks lower. S&P down 22, a decline there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you very much, Charlie. I'm Jen Ryan. I'm here with John Tucker. We're in for Paul and Matt, and this is Bloomberg Markets. Now let's go over to our next guest. We're about to speak with Angela Harrell. She's Chief Diversity and Corporate Impact Officer at Voya Financial. And she's here to talk about corporate diversity initiatives and challenges to these goals in recent years. So Angela, can you just start us off by talking a little bit about what is Voya Financial and what are the DEI initiatives that you're working on now?
Absolutely. Hello, and so happy to join you. So Voya Financial, we are an organization that is focused on the health and financial well-being of our clients. So think retirement plans, think employee benefits, think pension funds. We also have an asset management business. From a diversity, equity, and inclusion perspective, what we seek to do is to look both inside and outside to ensure that we are reflecting who we serve, providing a workplace where folks can show up and be themselves, be valued, embraced for all the differences that they have, and serve our clients because they reflect our clients. So they can better understand the diverse needs in the marketplace because they look like the marketplace.
You know, it's a very interesting time for DEI initiatives in the wake of last year's Supreme Court ruling ending affirmative action. And I wondered if you could talk a little bit about how you're coping with this. You know, what kinds of legal advice in particular are you getting on maintaining DEI programs?
Well, you know, the good thing, Jen, is we're all diverse. That's one of the things that I always talk to people about. Diversity isn't about those people there. Everything about us, our background, where we're from, our economic status. It's not just gender, it's not just race. Of course, those things are part of it as well. And so we really have always thought about diversity in terms of the differences that we're born with and those that we acquire throughout our lifetimes. And so for that very reason, that's all of us. Now, we do look at who's not around the table, who's not being represented. And we have been very clear about continuing to make sure that we have all voices around the table and that the voices are actually heard, because that actually makes for better business. It makes for better business decisions. And it means that we can actually address the diverse needs of the market. And so, although there have been headwinds in terms of, there being perhaps more of a political focus, this is about people, is what I always say. And this is about how we serve well.
Let's talk about challenges ahead for diversity. We had the results of the Iowa caucuses. Clearly, Donald Trump is the front runner in his party. What would a Trump presidency, another Trump presidency, mean on the diversity front?
I have always believed in the understanding of all of the very special dynamic that diversity brings. I often joke with colleagues and say, although you're an amazing individual, we don't want to have 6 or 7 of you around the table, because how then do we challenge each other? How then do we force each other to think differently and to solve complex issues and problems? And so for me, regardless of who might be in office, I think that understanding of the value of bringing diverse perspectives and thoughts into the room to solve some of the world's most critical issues will prevail.
Can you talk a little bit about the programs that you're working on at Voya? You've got a lot of focus on personal finance and financial education. Can you talk a little bit about how those are playing out? You do a lot of work across a range of diverse communities.
Absolutely. So we very much focus, in addition to my corporate hat, I also run our foundation. And so financial resilience is what we focus on there. Voya's purpose is to fight for everyone's opportunity for a better financial future. That comes through in terms of many of the programs that we have. One that is near and dear to my heart is called the National Personal Finance Challenge. Think National Spelling Bee, but for financial services. We have about 15,000 students that participate in this program run by a nonprofit partner called Council for Economic Education. These kids compete locally and then regionally and then nationally, putting together a financial plan for a fictitious family. So imagine being in a room with 200 kids. This was the finals at the Federal Reserve Bank in Cleveland last year. 200 kids talking about HSAs, health savings accounts, talking about 401ks, talking about whole versus term life. They've got to put together a plan in 2 hours for a family. They're talking about things. They understand things through the curricula that they've learned that adults don't know, that grown people don't have any idea about. And so how do we get to young people early? How do we make financial literacy fun? And how do we give them the skills to actually make sound financial decisions that will lead them to job security? We infuse diversity into this program because when we first started, we were first asked to become the title sponsor 5 years ago. We noticed that there wasn't as much representation in terms of the U.S. population in the room. So we specifically now make sure to recruit at Title I schools where the majority of kids are on free or reduced lunches. We have all girls teams, which has amplified the number of women, young ladies that are in the program. We went from 30% people of color 5 years ago to 51%, 35% girls to now 46% girls competing. It's making a meaningful difference in their lives and in their communities and in their families.
We just have a minute left. There's something I would love to talk to you a bit more about this, but unfortunately there was one other question I was very interested in asking you. Could you tell us quickly, going back to what you were discussing earlier about the landscape now that we're looking at, how do you think about hiring and how do you give advice about what kind of hiring practices are best for people in this environment?
Only about 30 seconds there.
Best hiring practice, always hire the most qualified candidate and always think about how diverse and wide you can make that pool.
Angela, a pleasure. It was great to talk to you. Appreciate it. Angela Harrell, the Chief Diversity and Corporate Impact Officer at Voya Financial. Corporate diversity. I guess we're making progress, but still have a ways to go.
It's certainly a very big focus for a lot of companies, and I'm on the equality team as an editor at Bloomberg, and I can tell you, there's a lot of interest in our stories.
That's fantastic. S&P 500 right now, 26 points lower. That's down about 0.5%, 47.57 on the index. I'm John Tucker, along with Jen Ryan, and you are listening to Bloomberg Markets. And that brings us to 12:50 on Bloomberg Markets. Let's get an update with company news. And here's Steve Rappaport.
John, the head of OpenAI, seeks to reassure people who are worried that artificial intelligence technology will take their jobs. CEO Sam Altman spoke with Bloomberg's Brad Stone at Bloomberg House in Davos, Switzerland.
It's not yet like replacing jobs in the way or to the degree that people thought it was going to. Of course, jobs will change, and of course, some jobs will totally go away. But I think AGI will get developed in the reasonably close-ish future, and it'll change the world much less than we all think. It'll change jobs much less than we all think.
That's OpenAI CEO Sam Altman. He also added, right now, AI is a job enhancer. Prepare for a tough bonus season. That's the message for Deutsche Bank employees from Chief Financial Officer James von Molk.
Look, it'll reflect performance in 23, and as you've seen in a number of different areas of the investment banking business in particular in 23, it had been a difficult market. I think we and our competitors want to pay for performance and work hard in our managing our incentive compensation structures to do that, and that's something we aim to be consistent on.
That's Deutsche Bank CFO James von Molk speaking to Bloomberg Television at the World Economic Forum in Davos. Goldman Sachs topped profit estimates as its equities trading unit posted a jump in revenue that was triple what analysts expected, capping off what is being pitched as a year of transition. The Asset and Wealth Division helped drive the gains, posting its highest quarterly revenue in 2 years on a gain tied to the sale of a financial management business. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And you're listening to Bloomberg Markets. I'm John Tucker along with Jen Ryan. 12:55 on Wall Street. Let's get an update now. News from around the world. And for that, we head to the Bloomberg 99.1 newsroom in Washington and Nancy Lyons. Hi, Nancy.
Thanks, John. The snowless streak along much of the East Coast is over. Residents up and down the Atlantic seaboard are digging out from snow and dealing with frigid temperatures. Bloomberg meteorologist Rob Carolyn says the snow could be lingering for a while in some spots.
An area of low pressure passing southeast of New England this afternoon will keep snow going across much of southern New England and also across upstate New York. Looks like accumulations across New England will average an additional inch along the coast. Will there be a changeover to rain during the afternoon? Inland locations could see an additional 2 to 4 inches of snow on top of the inch and a half they've already received.
Again, Bloomberg meteorologist Rob Carolyn. He says conditions should improve by the weekend. Well, winter weather continues to cause headaches at airports across the country. So far, over 1,500 flights within, into, or out of the U.S. have been canceled. More than 3,000 have been delayed. Among the airports heavily impacted, Chicago O'Hare, Reagan National, Houston Bush, and New York LaGuardia. The architect who was charged in a string of murders known as the Gilgo Beach killings is now being accused of a fourth death. Authorities say Rex Heuermann has been formally charged with the death of a Connecticut woman who was the mother of two, whose remains were found along a coastal highway in New York. Today, Heuermann pleaded not guilty. You can add a new name to the list of EGOTs. Those are entertainers who've won an Emmy, a Grammy, an Oscar, and a Tony. The new name is Sir Elton John. He won an Emmy last night to earn EGOT status, the 19th entertainer on the list. It was for Elton John Live, Farewell from Dodger Stadium, that aired on Disney+. Other big winners last night were Succession, that won Best Drama, and multiple other nods, along with Bear, that also won several awards, including Best Comedy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, John and Jen.
All right, thanks, Nance. Appreciate it. Jen, did you see this story? New Jersey Governor Phil Murphy, again, pushing back on New York's plan to charge motorists driving in a Manhattan central business district. He says this congestion pricing violates the U.S. Constitution. So this is a new toll, and he claims it discriminates against out-of-state residents, particularly New Jersey residents who drive into the city through the Lincoln Tunnel every day and work really hard and have to pay and pay and pay. Not only the Port Authority tolls, but the New Jersey tolls, the high gas taxes that we have. And some people are paying more in tolls and fees than they are on their mortgage. And I won't name any names.
Yeah, let's not name any names here on the radio, but I feel like you've got some real first-person experience here.
Yes, definitely first-person experience. For people in the rest of the nation, I don't know of, well, outside of London, I don't know of any other city that charges people to come in their cars during certain hours.
Yeah, I'm struggling to think of one, and I'm sure somebody, as soon as the show is over, will point a country out to us. But I would point out that Transport for London, which runs public transport.
You have the experience of having lived in London, but you didn't necessarily drive into the city center, did you?
I did not drive into the city center, but I am a longtime Londoner, and I can tell you that Transport for London says that it did indeed reduce congestion by about 30%, and it also boosted use of public transport, namely buses.
Okay, but when you don't have the choice of public transportation in the middle of the night to come in, why are you going to charge somebody who has to drive? And it's particularly, delivery drivers who come in at those hours because of reduced traffic still going to get charged. And the money goes to the MTA to build up New York City's public transport system.
And this is the complaint of New Jersey.
What is the benefit for somebody who lives in New Jersey? Zero. So the basis of this new amended lawsuit is that it basically violates the Interstate Commerce Clause or thereabouts and has no benefit for the people who are going to pay for it. That's my gripe for today, Jen. Jen, what a pleasure. I'm John Tucker along with Jen Ryan, and this is Bloomberg.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones. We only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
What does Donald Trump's commanding win in Iowa signal for the Republican presidential nomination? U.S. lawmakers released a stopgap spending bill to avert a partial government shutdown. But what's the risk to House Speaker Mike Johnson? And we'll look at the war of words following Taiwan's election of a U.S.-friendly president. I'm June Grasso, sitting in for Joe Matthew, who's making his way back from Iowa. First, before we get to that, let's look at what's happening in the markets. Here's Charlie Pellet.
Hi, thank you very much, June Grasso. Lower across the board right now for the Dow, the S&P, NASDAQ, all in the red right now. 26-point drop on the S&P 500 index, down by about 0.6%. We've got the Dow down 282. That is a drop right now of 0.8%. NASDAQ, the composite index, down 81 points, a decline right now of just about 0.5%. NASDAQ 100 index lower now by 0.4%. 10-year yield 4.07%. We've got the 2-year yielding 4.24%. Spot gold down 1.5%, 2025 the ounce. While West Texas Intermediate crude amid all the Red Sea tensions, WTI lower now by 0.9%, 72.06. Brent, the global benchmark, down by 0.3%, 77.94 for a barrel of WTI. Bond yields rose, stocks fell on speculation. Wall Street's bets on aggressive Fed rate cuts have gone too far. So what about election risk on Wall Street? Jeffrey Sherman is Deputy Chief Investment Officer at DoubleLine Capital.
I think as we talk about this political landscape, and we're going to be talking about it for the next 10.5 months, I think that there really isn't much difference to markets at this stage. And so looking forward, I think we're going to go back to just looking at the strength of the overall economy. Markets themselves are really focused and very myopically focused on the Federal Reserve today. And I think that's going to be the thing that's going to set the course for markets for the next couple of months, and not really who are these presumed candidates on either side of the equation.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Boeing shares trading lower. Boeing, of course, member of the Dow. The Dow right now down by 0.8%. Boeing extending its 2024 route after analysts and a key customer voiced concerns that scrutiny of the planemakers manufacturing since a January 5th near disaster with a 737 MAX 9 could lead to a slowdown in aircraft deliveries. Also, analysts at Wells Fargo have cut their rating on Boeing to equal weight from overweight. Boeing shares right now, they are trading down by 7.7%. So again, recapping, we are looking at a down day on Wall Street. S&P right now lower by 27 points, a decline of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. In the first votes cast in the 2024 presidential race, Donald Trump tightened his grip on the Republican presidential nomination, with Iowa voters delivering him a commanding win in last night's caucuses, moving him one step closer to returning to the White House. Trump won 51% of the vote, with rivals Ron DeSantis and Nikki Haley not even close. DeSantis came in second, winning 21.2%, and Haley close behind, capturing 19.1%. Here to discuss what it all means and how it happened is Terry Haynes, founder of Pangea Policy. Thanks for joining us, Terry.
Thank you, June. Appreciate it.
So it seemed like the caucuses were over before they began. What's the significance of Trump coming in with a majority of the votes here?
Well, I'm going to give you a little bit of a non-consensus view about that, frankly. Trump was expected to come in with about 50% of the vote, and surprise, surprise, that's exactly what pretty much exactly what he came in with. 4 takeaways for you. First, there's still a competitive race since 50% or more Republican voters don't want Trump, and there are only 2 not Trump candidates left, either of which could carry that 50% forward. Secondly, I think a former president, which is losing half of his party's primary voters, is not good news for that candidate, even though he did win. Thirdly, looking ahead to New Hampshire next week, you're likelier to see a more competitive race there, since Trump is polling at low to mid 40s, and right now, based on polling, you can expect a surge largely from Haley. Fourthly, I think this is not well understood at all, but the polling in Iowa, particularly the Iowa poll from the Des Moines Register, showed that 30% of likely caucus goers would not support Trump and would not vote for Trump in the general election, whether or not if they'd voted for Trump in the caucus. That to me presages a Republican Party split that I've been talking about for some time.
But as far as the numbers that we see now and what we see ahead, doesn't it appear that Trump is going to wrap it up?
No, I don't think so at all. Based on right now, no, I don't think so at all. If what you've got is a situation where he wins the Iowa caucuses, but let's remember he wins with just over half the overall vote that came through in the caucuses in 2016. He gets sort of the not Trump side, gets almost as many delegates as Trump did out of Iowa. Number one. Number two, New Hampshire is right now, based on polling, more competitive than Iowa. So you're going to have a competitive race, and where nothing is going to happen for the month after New Hampshire. So I think what you're going to see is three main candidates, Trump, Haley, and DeSantis, all scratching and biting for advantage. I think you're going to see a lot of visits from Haley and DeSantis to Midtown Manhattan to pick up additional money and additional support there. And I think it's right now it's still anybody's ball game. If you've got a situation where you're not going to have another vote until late February in South Carolina or early March in the Super Tuesday states, that's an awful lot of time in politics.
It certainly is. So DeSantis and Haley seem to be just battling each other rather than Trump, and their numbers are just about the same. So what did they learn, if anything, from Iowa?
I think what they learned is that they need to be on top in order to be the candidate that consolidates the not Trump vote. What you have, if you're DeSantis and Haley and you're thinking about this, what you think is, first, I've leapfrogged everybody else. Now my task is I've got to leapfrog the other not Trump candidate. I've got to be the alternative to Trump. The vast majority of that 50% vote comes to me, and then I can duke it out with Trump. I mean, that is what they're thinking about right now.
Trump polls strongly with working-class white voters. He won with white evangelical Christians, who are nearly half of the caucus goers in Iowa. Is there any chance for DeSantis or Haley to pick off those voters?
Oh, I think some. Iowa, I think, is unique or unusual in both the amount of evangelicals that exist and how much and how well they're organized. Frankly, yeah, sure, they could do that. But I think what you're seeing is a situation where Trump is kind of topping at 50% right now. He's not going to be 50% in New Hampshire, almost certainly. If he does, we'll have a different narrative next week. But almost certainly, he doesn't get to 50% or close to it. You will have a more competitive race. And then what you're going to have is you're going to have a free-for-all in the first 2 weeks of March, where the voters start sorting themselves out. So right now, it's very much anybody's race, and there are a lot of variables here, including the desire to want to stop Trump from getting the nomination, that I think, frankly, haven't crystallized yet.
So Haley is heading to New Hampshire. DeSantis is heading to South Carolina. Tell us about the importance of New Hampshire.
Well, I think New Hampshire is much more of a hinge for the race than Iowa might be. Your colleague Mike McKee points out that drilled down even farther than I did on results in discussing this today, and points out essentially that there's about 2.5% of Iowans that actually voted in the Iowa caucus, and this is a state that has a 75% or had in 2020 a 75% turnout rate statewide. So this is a very, very tiny sliver of Iowans generally. New Hampshire, I think, is more of a hinge, because what you have is a situation where Haley looks like she's surging, looks like she's competitive, and the not Trump vote today exceeds the Trump vote. And so if that's a trend and that continues over the next month or so, then you've got a much bigger race. But if over the next week Trump tamps that down and New Hampshireites come away from this thinking, well, I'm probably going to vote for Trump over Haley, let's say, then that narrative gets shot to pieces. But right now, it's still very much anybody's ballgame in New Hampshire. And what happens in New Hampshire, frankly, flavors the race going forward, where people will spend the next month after New Hampshire saying, well, is Trump actually invincible? Well, seemed like he was in Iowa, but maybe not in New Hampshire. And that provides some running room for Haley and DeSantis to try to keep consolidating the vote.
And DeSantis going to South Carolina and basically skipping New Hampshire. What is he giving up by doing that?
Well, he's giving up New Hampshire competitiveness, obviously, but DeSantis's idea all along was he was going to go as hard into Iowa as he possibly could. He was going to be as well organized as possible. That probably brought him the scraping out the second place that in fact happened. He got the endorsement of the vast majority of the regulars in the Iowa Republican Party, from Governor Reynolds on down, and he also got the evangelical endorsement. I think he thinks that he could play whatever the result in New Hampshire is. He can play well in South Carolina. Firstly, secondly, it's an awfully good opportunity for him to go take Haley out, since if she's weak in her own home state, DeSantis would think that would turn the not Trump side of the vote much more to DeSantis.
So do you think that DeSantis has an advantage over Haley at this point?
I think it's a little too soon to say. What you've got is a situation, I don't have the exact numbers in front of me, but you've got a situation where DeSantis' second place is basically eked out about 4,000 more votes than Haley did, with about Haley and DeSantis together, roughly about 45 to 50,000 votes cast. So, I think he probably thinks he has the ability to have an advantage over Haley if he spends a month hammering away in South Carolina. But certainly that will weaken Haley and enhance his chances to some extent. But I doubt very much that he sees the opportunity to be free and clear. I think this is going to be a race for the half of the vote that's not Trump for the next 4 to 5 weeks, frankly.
And as far as fundraising, does DeSantis have more of an uphill battle there than Haley?
Right now, and I mean, this includes Wall Street, of course, but right now, a lot of the Wall Street money has gone to Haley, frankly, because based on polling, Haley seems to be a better matchup candidate against Biden in the fall general election. And certainly what a lot of deep-pocketed Wall Street people have wanted, and a lot of other people have wanted, is a candidate that most clearly can beat Biden and most clearly is business-friendly. Both of these candidates are certainly business-friendly, where Haley's advantage is that she looks more electable. It's going to be up to DeSantis to counter that narrative. He does to some extent already by talking about, he's the only person that's actually got a track record of doing a bunch of things that are business friendly and economically positive. But he's going to have to ramp that up in order to separate himself from Haley, I think.
So does he have to win one of these early states in order to continue?
Well, I think what he has to do is he has to have a very good showing in South Carolina, or it's going to be difficult for him. And then he's going to have a situation where there are, in the first 2 weeks of March alone, there's something like 11 primaries and 6 caucuses. I mean, a a real dump of information and voting all at once. His job is going to have to be coming out looking like the better alternative than Haley in the early Super Tuesday states in order to remain viable.
So tell us more. You think that if Trump is the nominee, the Republican Party won't unite behind him, even though you hear even from the former governor of New Hampshire, well, if it's Trump, I'll vote for Trump. Of course, I'll support the Republican nominee. You think that that won't happen? Republicans won't fall in line?
I'll take the quote that you just gave me. I will vote for Trump and I will support the nominee. What isn't said there is that I will actively go out and try to make the nominee win. I think what you're going to have is a situation, and this is developing, and I think it develops into the spring and summer, frankly. But if Trump is the nominee, you're going to have a situation where Republican luminaries in the Republican Party are going to say to themselves, "What's better for me? Is it better for me to firstly say I won't vote for Trump and you shouldn't either, or should I say I'm going to I'll absolutely support the nominee, but then absolutely do nothing other than say that in order to support?" There's that, number one. Number two, I point out and have for the last several days, one of the most interesting findings of the Iowa poll, the Des Moines Register runs, a very accurate kind of gold standard poll, which showed that about 30% of Iowans who were going to vote in the caucuses said they wouldn't support Trump in the general. I think you get a voter split here too. And the way I look at Trump and have looked at him for some time is a lot like a pig in a python. What's really, if you're an office holder, if you're what I call a Republican luminary, your interest is in getting past Trump as much as possible. If you're not enamored of Trump in the party, you want him past you. If you're very enamored with Trump, but he loses, well, then maybe you become more prominent as a result of that. But either way, the way to get past Trump is to have him lose, and that's the way politicians think, and I think you'll see a lot more of that coming up.
Terry, I think we'll leave it with Pig and the Python. And thank you so much for being with us. That's Terry Haynes, founder of Pangea Policy. And this crossing the Bloomberg terminal, a judge has blocked the JetBlue Spirit deal on antitrust grounds. JetBlue Airways can't complete its $3.8 billion acquisition of Spirit after a federal judge in Boston found the deal would stifle competition and raise fares for consumers. We'll see if that is likely to be appealed by those parties. Coming up next, U.S. lawmakers released a stopgap spending bill to avert a partial government shutdown. What's the risk for the House Speaker? This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street, and we do check markets all day long here at Bloomberg. We begin with a developing story as a federal judge in Boston rules that JetBlue Airways cannot complete its $3.8 billion acquisition of Spirit Airlines. U.S. District Judge William Young sided with the federal government, ruling that the deal would stifle competition and raise fares for consumers. Spirit shares plunging now. We did have a trading halt a few minutes ago, but right now trading has resumed in Spirit. Stock is down 52.5%. We do have shares of JetBlue higher now by $7.37. A key player earlier on in this battle had been Frontier, ticker ULCC. Frontier, of course, tried to merge with Spirit. Shares of Frontier, they're down now by 2.5%. So again, repeating the headline, federal judge in Boston says no to the combination of JetBlue Airways and Spirit. Spirit plunging 52% now. We've got JetBlue higher by 8.1%. Stocks lower across the board. Back to work Tuesday, holiday shortened trading week with the S&P down 21, drop there of 0.5%. Dow Industrials down 261, a decline of 0.7%. Nasdaq right now down by 63, a drop there of 0.4%. 10-year yield 4.07%, the 2-year 4.24%. Gold down $30 the ounce, down 1.5%. 20.25 the ounce. West Texas Intermediate crude down 0.7%, 72.16 a barrel. So again, recapping, stocks lower, S&P down 22, drop there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. U.S. lawmakers released a stopgap spending bill to avert a partial government shutdown in just 4 days, greatly reducing the chances of a closure, but risking conservative Republican ire against House Speaker Mike Johnson. Joining me is Bloomberg Government Congress reporter, Zach Cohen. Hi, Zach. So tell us what's in this package, the bill.
It essentially punts all the deadlines that were coming up this week and next or next month to avoid government shutdowns of various agencies, and would punt those to March 1st and 8th, I believe. And so essentially the same deadlines that Congress did face this week to fund things like military construction and the Department of Energy, Department of Agriculture, all those would have to get done by March. Instead, the Senate's coming back in just a few hours, despite the snowstorm that's ravaged D.C. in the last couple of hours, to at least advance that bill and potentially get it over to the House by the end of the week, in which it would send it to President Biden's desk for his expected signature.
So it's just kicking the can down the road?
Exactly. Essentially, Speaker Mike Johnson, Senate Majority Leader Chuck Schumer had been negotiating the top-line funding for the rest of the current fiscal year, which started September 30th and runs for the next 9 months, and delays in reaching that sort of top-line agreement, and then figuring out how to divvy up the rest of that funding for various non-defense spending. It left appropriators very little time to actually come up with bills that could pass both the House and the Senate and reach President Biden's desk. And so this new stopgap bill, a third of the current fiscal year, will give appropriators a little more time to get those bills done.
And so what happens now? Is it likely to pass the Senate and the House?
It is likely. It'll take the Senate a couple of days, likely to pass its version and then send it over to the House, where it'll pass likely on with overwhelming bipartisan support. The issue becomes, they could have moved it with a simple majority, but that would have invoked the ire of certain hardline conservatives in the House who have been a thorn in the side of not just Speaker Mike Johnson, but his predecessor, Kevin McCarthy. And so a bipartisan bill, something like this, a temporary measure to extend current government funding at current levels, that will sort of sideline conservatives. They've called this particular bill a total surrender, and certainly poses some challenges to the Speaker's leadership, especially given he had said that he had ruled out any additional stopgap bills.
Yeah, so there have been a lot of threats from the ultra-conservatives in the House. What do they say it would take for them to try to do to Johnson what they did to Kevin McCarthy?
They haven't explicitly said what that would be, but essentially these spending measures are really the sole priority of Congress right now, especially in an era of divided government. It's really House conservatives' only opportunity to try to bend legislation to their goals. And so they have not said sort of what the threshold would be to vacate the chair, so to speak, to force a vote on Johnson as they did for McCarthy, and no one has said that they plan to do so at this rate. But given that hardline conservatives in the House have been eager to try to cut spending this year since Republicans took control of the House, this leaves them even less time to come up with some sort of longer-term funding package. And remember, there's only a couple months left in the current fiscal year, so eventually any sort of concessions on fiscal spending cuts has less and less impact as the more and more of these temporary measures are put in place.
And Biden is asking to meet with Senate Majority Leader Chuck Schumer and Speaker Mike Johnson.
That's correct. I think our colleague Eric Wasson just confirmed that report. And so that'll be another opportunity for the top leaders to get into the same room to try to hammer out maybe a longer term deal on government spending that could avoid any potential government shutdowns, at least through the end of the current fiscal year, ending September 30th, 2024. It remains to be seen exactly what they'll discuss. There's obviously the larger issue of coming up with some sort of border agreement that would unlock aid for Ukraine and Israel as they are both engaged in war in Europe and the Middle East. And there are another number of key factors that Congress will need to take up in the coming weeks. And this will be an opportunity for those leaders to come up with some sort of agreements.
So what the House does seem to be doing lately is a lot of hearings, contentious hearings on Hunter Biden, on impeachment. First of all, where does the impeachment inquiry stand?
Well, certainly the House had voted to authorize an inquiry, basically the next step to try to ramp up their efforts to subpoena information from the Biden family, from the Biden administration, and a formal authorization vote last year. Republicans hope bolsters their legal case in trying to get those records. There is no indications of an imminent vote to formally impeach Biden over this. There is, however, a vote coming up to hold his son Hunter Biden in contempt for exactly this issue of not providing the documents that House Republicans have asked for in their investigation of the Biden family. And certainly this is not something that we haven't seen before. House Republicans can sort of move on with these oversight measures while Senate Democrats, who control the other chamber, can continue to move President Biden's nominees. Certainly a key priority for them as they eye potentially the end of Biden's first term.
You know, the committee hearing on Hunter Biden last week, where Biden surprisingly showed up with his lawyer, and the whole issue being he wanted to testify in open hearings so that the public could see what he said, and the committee wanted him to testify behind closed doors. It was so chaotic in that hearing. I mean, can that committee the committee came to a decision, but will the House actually vote to hold him in contempt?
They could. It seems unlikely to me that they would schedule a vote to hold Hunter Biden in contempt if they didn't think they would have the votes to do so. That vote, I believe, will come up later this week, something that the House can vote on while they're waiting for this stopgap measure to avoid a shutdown works its way through the Senate's own procedure. And so certainly an issue that in the past has riven House Republicans. There's certainly a number that have been skeptical of the impeachment push. But at the moment, it does appear to be that there is at least some there's at least some consensus to try to get Hunter Biden at least to agree to some of these document requests.
And so you think that they have enough votes to hold Hunter Biden in contempt, even though you have all those Republicans who are in districts that Biden won and, seem that they have a tenuous hold on those districts?
That's a great point. There are these 17 Republicans that are in districts that Biden himself carried in 2020, the more moderate people, especially a lot of folks in New York and Long Island and the Hudson Valley, that have a more moderate voting record, and some of the people that have been more tentative to embrace this effort to impeach Biden or investigate the family and have made it clear that they haven't seen any evidence yet of any wrongdoing or any corruption that would warrant an impeachment. But certainly, I believe it was a party line vote, every Republican supporting this effort to at least initiate an investigation that could lead to an eventual impeachment. And that's been the line so far. As Republicans have said, look, we need to at least look into it. and not ready to, convict or acquit, so to speak, if we're using sort of more legal terms. But certainly they're not going to hold back their leadership from Speaker Mike Johnson, Oversight Chairman James Comer, Judiciary Chairman Jim Jordan. These are folks who are really leading the charge and for the moment have the support of their colleagues.
And as far as the funding for the government, full year funding for the government, what changes between now and March would get us to full year funding?
Certainly some appropriators had hoped last week to at least get the top line figures for their individual subcommittees to basically write these bills. Something like $770 billion is being earmarked for I believe, non-defense spending, domestic programs. And so that all has to be divvied up among a myriad number of agencies. And so those particular top lines haven't been sorted out just yet. And again, something that normally would have happened earlier in the process. But after Johnson and Schumer sort of re-engaged in negotiations over top line figures that were worked out in the debt ceiling deal, the one that avoided a default of the national debt last year, that left appropriators very little time to come up with those subcommittee allocations. And so once they have those potentially this week, that would allow them the time to actually write appropriations bills and pass them in March, which then opens up the opportunity to start thinking about fiscal year 2025 and think about government funding in the last quarter of this year and beyond. And so for all the trouble that Congress has had in trying to reach agreements on these bills, it's all going to start again from scratch as soon as these bills are done.
A lot to watch. Thanks so much, Zach. That's Bloomberg Government Congress reporter Zach Cohen. Now let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, June. Ukrainian President Volodymyr Zelensky today has been rubbing shoulders with some of the biggest names in global finance at the World Economic Forum in Davos. He's seeking to bolster wavering support for his country's fight against Russia.
We're so happy.
God bless you.
Thank you so much.
Along with Jamie Dimon, Zelensky spoke with Blackstone Steve Schwartzman and Bridgewater founder Ray Dalio. Zelensky wants backing from investors to help rebuild his country's battered economy with more than $100 billion in vital aid for Kyiv currently stalled in Washington and Brussels. The U.S. Supreme Court refused to consider Apple's appeal in an antitrust suit challenging its lucrative App Store. We get more from Bloomberg's Karen Moscow.
Both Apple and Fortnite maker Epic Games had asked the court to hear an appeal related to the case. The justices turned down both requests without explanation. The High Court's decision will allow an appeals court ruling to go into effect, letting developers direct iPhone users to cheaper purchasing options outside of Apple's system. The company charges developers a commission of as much as 30% for digital goods and services sold through its App Store. The decision will likely affect billions of dollars in revenue for the iPhone maker. Karen Moscow, Bloomberg Radio.
And the High Court is also refusing to consider whether transgender students have a legal right to use school bathrooms that match their gender identity. The case involved an appeal from an Indiana school district. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. JetBlue shares higher now by 2.9%. Spirit shares are plunging 52%. This deal is a no-go. This, according to a federal judge in Boston, who ruled this morning that JetBlue cannot complete its $3.8 billion acquisition of Spirit Airlines. We got more coming up in a matter of minutes with our George Ferguson. He's an airline analyst with Bloomberg Intelligence. But again, shares of Spirit, they are down now by 52.4%. JetBlue up by 2.8%. Of course, the other carrier that wanted to get involved with a deal with Spirit, Frontier Airlines. Right now, we've got Frontier Airlines shares lower by 4.7%. Down Tuesday, S&P now down 22 points, drop there of 0.5%. Dow Industrials down 264, a decline of 0.7%. The Nasdaq Composite Index down 59, drop there of 0.4%. 10-year yield, 4.07%, with a 2-year that's now yielding 4.24%. Spot gold down 1.5%, $2,026 the ounce. And a retreat today for crude oil. West Texas Intermediate crude now trading lower by 0.7%. WTI 72.14. That comes as Shell has halted oil tanker transits through the Red Sea as Houthi militants retaliated against U.S. and U.K. airstrikes in Yemen. The World Economic Forum is underway in Davos, and Bloomberg Radio caught up with Chevron CEO Mike Wirth, who talked about those maritime tensions in the Red Sea.
We engage with the U.S. Navy and other security organizations for all of our movements to the Arabian Gulf, the Red Sea, and on every voyage we have a security plan, and it's really ship by ship that we evaluate the situation. So we're working very closely with the maritime security authorities. The risks in the region have been accelerating over the last several weeks. These are risks we deal with all the time.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcast. Chevron shares among oil majors down 2.1%. ADRs of BP down 2%. ExxonMobil down 2.2%. All of that with the moving the lower price of crude oil. WTI again down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew. It was Taiwan's most hotly contested election in decades, and Taiwan elected current Vice President Lai Ching-te as leader of the country at the center of U.S.-China tensions, putting in power a man Beijing has branded an instigator of war. What happens next is anyone's guess. Joining us is Sean King, Senior Vice President at Park Strategies. Sean, just set the stage a little bit. Explain China's warnings before the election.
Beijing had said, Beijing is uncomfortable even discussing Taiwan's elections because their theory is that people who are Chinese are incompatible with Western-style democracy. So even acknowledging that people in Taiwan have a choice to their leader sort of betrays their own system at home. But they had let it be known that they were interested in either one of the opposition candidates winning and not the current vice president, who is now the president-elect. So if anybody at all listened to what Beijing was saying, however cryptically they said it, they rejected it.
And now, so the situation is China says Taiwan is part of China, even though the Communist Party that has never controlled Taiwan. What is this a source of continuing, animosity between China and the U.S., and does this election threaten to ratchet that up?
Well, starting first in the late 17th century, Taiwan has been part of China for a total of 217 years, but only for 4 years since 1895, and not at all since 1949, at least governed by the mainland. But the fact is that it's never been under PRC control, and the PLA, the People's Liberation Army, has never set foot on any part of Taiwan. So even though Taiwan has been part of China historically at different points in its history, and before that, it was actually home to Dutch and Spanish settlements and settled originally by Austronesian Aboriginal peoples, it's never been under PRC control. So if you listen to Mao and Kissinger from the old days and PRC officials today, Taiwan is the main irritant or the main issue in U.S. PRC relations, because until 1979, we recognized the government in Taipei as the Chinese government, as opposed to Beijing. We never recognized Taiwan as Taiwan per se, but we just recognized the government there as the sole legitimate Chinese government. So for us, I think the issues with the PRC are much bigger, whether it's freedom of religion, freedom of expression, the South China Sea, Beijing's backstopping North Korea. There are a lot of different things at play. It's, refusal to take a clear moral stand on the Ukraine war. But for Beijing, the Taiwan issue is front and center because the Communist Party of China has staked itself on Chinese nationalism, and also getting Taiwan would allow it to project naval power into the Western Pacific. So right now, I would say, especially from Beijing's side, Taiwan is the #1 issue in U.S. PRC relations.
So then how big of a loss was this for Beijing to have Taiwan ignoring its warnings, however subtle they may have been?
Well, the fact that people in Taiwan are voting at all is a loss for Beijing, but this in particular is an extra special loss. But people have been ignoring or turning their noses up at Beijing's warnings ever since 1996. In 1996, when Taiwanese had the audacity or temerity, as you would hear PRC officials say it, to actually vote for their first freely elected president, Lee Dong-wei, who got his PhD at Cornell, I might add, they shot missiles into the Taiwan Strait, hoping to intimidate people from going to the polls. Even more people showed up. When Zhu Rongji, the premier of the PRC in 2000, voted people not to vote for Chen Shui-bian, he did end up winning in a three-way race, and most people think that got Chen at least 2 to 3 extra points in the polls. So I'm sure whatever interference Beijing tried this time only made people more sympathetic to Lai. Also, former Taiwan President Ma Ying-jeou, who's drifted closer to the PRC in retirement, said that Taiwanese would welcome unification so long as it's peaceful, and told Deutsche Welle, German TV, that Taiwanese should trust Xi Jinping. That, I'm sure, only increased support for Lai. But even the KMT candidate, who's thought to be China-friendly, which is kind of a mischaracterization, he's native Taiwanese, he spoke in native Taiwanese, and he rejected Beijing's Hong Kong one country, two systems proposal for Taiwan. Only 1 to 2% of people on Taiwan support immediate unification of any kind. So for years and years, and even more so echoed on Saturday, Taiwanese categorically reject any overture from the mainland.
Is there a fear among Taiwanese that China might take some action, military exercises or otherwise, in light of the election returns?
We seem to be more worried about Taiwan's security than Taiwanese themselves are. After Nancy Pelosi, a freely elected leader, was welcomed to Taiwan by another freely elected leader and exchanged in democratic exercise and exchange of ideas, Beijing, of course, did these made-for-Hollywood exercises around Taiwan. And, most people there in Taiwan, they've learned to live with it. For 70 years, they've feared Beijing invading the island. So, yes, this is on their mind long-term, but it's not going to stop them from living their lives. And they don't expect any immediate action, nor do I. People compare it to Ukraine, but I don't see the comps. Russian soldiers were able to waltz across an unguarded Ukrainian land border where many senior Russian officials had actually served in the Soviet army. It's 100 miles between Taiwan and the mainland, rough seas. We would see it coming. And Biden has said 4 times we would defend Taiwan in case of attack, even though there's obviously no treaty obligation to do so, because you can't have a treaty with someone you don't recognize. But I think that Taiwan is too important for the free world to lose, so the U.S. would intervene if Beijing unprovoked attacked the island. So most people don't expect an invasion anytime soon, and that's my feeling as well.
Well, those are good words, good thoughts. Thank you so much for joining us on the show. That's Sean King, Park Strategies Senior Vice President. Coming up next on Sound On, we're going to talk about that JetBlue Spirit deal that was quashed by a judge. on antitrust grounds. I'm June Grosso, sitting in for Dave Matthew on Sound On. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Spirit Airlines shares are plunging. JetBlue is higher. Spirit now down by 51.5%. We've got JetBlue shares up 3.9%. Federal judge in Boston has ruled that JetBlue cannot complete its $3.8 billion acquisition of Spirit Airlines. We got more on the topic coming up with our George Ferguson of Bloomberg Intelligence in just a moment. Again, Spirit plunging now by 50%. JetBlue higher by 4.1%. Some of the other stories that we're following: the World Economic Forum underway in Davos. Bloomberg Radio is there. We caught up with Robin Vince, President and CEO of Bank of New York Mellon.
Cyber's always on our mind, but so is innovation. We talk about AI a lot here at Davos this week, and AI is going to be important. We believe, we're excited about it, but at the end of the day, it needs to have guardrails. If we don't do those things well, like many things, it's going to be a problem. We view resilience as a commercial attribute, and our clients do too.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. By the way, Vince also says BNY employees are now expected to be back in the office 3 days a week. Earnings news, lots of them. Going to be that kind of a week. Goldman Sachs reported this morning. Goldman Sachs shares, they are up now by just about 0.1%. Profit topped estimates also reporting this morning. Morgan Stanley after earnings down 5.2%. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Sound On Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew. JetBlue Airways cannot complete its $3.8 billion acquisition of Spirit Airlines. A federal judge in Boston found the deal would stifle competition and raise fares for consumers. Joining me to talk about this is Bloomberg Intelligence senior airline analyst George Ferguson. So, George, why did the judge find that this would stifle competition?
Well, I think what what we took from the trial was that the judge really saw the ultra low cost carrier market as being a distinctly different market than the sort of thinking of this as the broader airline industry, because really putting Spirit together with JetBlue was going to create the fifth largest airline in the country, and it seemed to me that wasn't going to markedly change competition, but I guess they convinced the judge that it would, and now I think JetBlue has to figure out if they want to reinvigorate the legal challenge and really go for the buy, or whether they want to walk away and let it go. So, I mean, JetBlue is competing with the 4 legacy carriers that have 80% of the market. So did the judge take into account that JetBlue might need this in order to compete better? So I guess the judge just didn't see it that way, right? And so I mean, it's hard. I guess it's hard to always understand, why they make these decisions. I'm not sure that the Spirit was really going to help them compete that much better. I mean, I think when you look at it from the perspective of JetBlue, there was really going to be a lot of work to be done to bring Spirit into the airline. They're going to have to modify all the airplanes in Spirit's fleet to, add the JetBlue amenities. They're going to have to merge the cultures, and the cultures are dramatically different, right? I call JetBlue a kinder, gentler budget airline with a bit of first class in the front of it. And so I just think that also, actually, I would add, it looks to us like the U.S. domestic market might have too much capacity now already. So honestly, it kind of looks to me like JetBlue may have dodged a bullet. The acquisition would come a lot cheaper right now, and if I was JetBlue, I think I'd just walk away. Really? You think they've wanted this deal for a while, or some deal like this? Well, I think there's a lot of concern that if Frontier merged with Spirit Airlines, that you'd have this really big ultra low cost carrier that JetBlue would have to compete against. Again, I kind of see, I kind of think of JetBlue as a more kinder, gentler budget carrier. So I'm not sure that when people go out and book tickets that they look at both the same. And so, I'm sorry, go ahead. No. So, I'm just, so you think that JetBlue then will not appeal this because it's, they're looking a gift horse in the mouth, so to speak? I mean, at a minimum, the price of Spirit is way below what JetBlue originally offered to buy the company out at. And so I think that alone, and again, the fact that we think the market looks a bit overcapacitized right now, if that's a word. We saw Delta's earnings. I get the drift, though. We saw Delta's earnings on Friday. Domestic fares were falling. Domestic yields are falling, which are synonymous with fares. So there may be too much capacity in this market anyways. So why would you want to buy a bunch of capacity, a bunch of airplanes in a market that may have too much? And so what's ahead for this then? Is this a done deal unless JetBlue decides? Oh, I have a better question. Are there any cancellation fees here if it can't complete the acquisition, which it can't now? There were a bunch of cancellation fees. I have to go back and do all our math again and see what's paid and not been paid. But JetBlue, I believe, still has money to send out the door. I think it pales in comparison to what they were going to spend if they acquired Spirit. But there's still some money that has to go out the door.
All right, very interesting. We'll see what happens. Thanks so much. That's Bloomberg Intelligence Senior Airline Analyst George Ferguson. Coming up next on Sound On, we're going to be talking about Donald Trump from the Iowa caucus to the Manhattan federal courtroom. This is Bloomberg.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew, who's making his way back from Iowa. Fresh off his win in Iowa, Donald Trump heads into a New York courtroom for a defamation trial. What would Trump as the GOP nominee mean for investors? And the drowning deaths of 3 Mexican migrants escalates the risks between Texas and federal officials. First, let's take a look at what's happening in the markets. Here's Charlie Pellet. Charlie.
Thank you very much, June Grasso. We got stocks lower across the board. Cannot let the JetBlue Spirit Airlines story go because right now we have got Spirit Airline shares. They are plunging. Spirit right now is trading lower. Spirit down by 50%. JetBlue moving higher. We've got JetBlue up now by about 4.7%. Moments ago, or actually last hour, we had a federal judge in Boston ruling that JetBlue cannot complete its $3.8 billion acquisition of Spirit. George Ferguson is with Bloomberg Intelligence. He spoke with Arjun Grasso moments ago right here on Bloomberg.
The judge really saw the ultra low cost carrier market as being a distinctly different market than the sort of thinking of this as the broader airline industry, because really putting Spirit together with JetBlue was going to create the 5th largest airline in the country, and it seemed to me that wasn't going to markedly change competition, but I guess they convinced the judge that it would.
George Ferguson with Bloomberg Intelligence. Again, Spirit shares down now by 50%. JetBlue up by 5%. Stocks lower across the board. S&P down 27. Drop right now of 0.6%. Dow Industrials down 325. A decline there of 0.9%. And we've got NASDAQ lower by 75. A decline of 0.5%. 10-year yield 4.07% with a 2-year right now 4.24%. Spot gold down 1.5%. 2025 the ounce. West Texas Intermediate crude down 0.8%, 72.07 a barrel on WTI. Goldman Sachs out with profit that topped estimates. Shares of Goldman Sachs, they are advancing today. Also reporting earnings this morning. We heard from Morgan Stanley. Morgan Stanley down 5% right now. Again, we've got Goldman up by 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. Fresh off his victory in the Iowa Republican caucuses, Donald Trump arrived in a Manhattan courtroom this morning for the next trial of his crowded legal calendar. This time in a defamation lawsuit by E. Jean Carroll, the writer who won a separate sexual abuse case against him last year. My guest is Dave Ehrenberg, the Palm Beach County State Attorney. He joins us in our New York studios. Dave, you left sunny Palm Beach to be here in New York for the snowstorm.
And there's no place I'd rather be.
All right. Fair enough. Well, Donald Trump is here, too. He continues his tour of courtrooms around the country, like the D.C. Appellate Court last week. He doesn't have to be in the courtroom, but he is for the very beginning of the trial. So what do you make of this? Is he trying to impact the jury or impact the voters?
impact the voters. This is all about public relations. This case has already been lost. The judge said we're not going to relitigate the past trial, which said, according to the jury, that Donald Trump committed sexual assault against E. Jean Carroll and committed defamation against her. So now we're just talking about damages. How many millions in compensatory and possible punitive damages will be assessed? So the only reason why Trump is there, I think, is to try to gain political points, to show that he is being derided as the leading candidate for president. This is the Biden administration doing this, even though that doesn't make sense. And ultimately, nothing fuels his MAGA base more than martyrdom and grievance.
Now, I want to talk about what his defense could possibly be here, because the judge has basically cut off every avenue of defense that I can see. He can't say that he can't deny that sexual abuse happened or that he believed his statements were true. He can't comment on Carol's prior romantic relationships or the lack of DNA. I mean, what is his defense here?
He doesn't have a defense. In fact, I don't think it's a good move for him to try to testify, because if he tries to pull what he did in the New York civil fraud trial, in this trial, he's going to get sanctioned. He's going to get cut off. This is a jury trial. This is not a bench trial like the last trial. And you have a federal judge and Judge Kaplan, who's not messing around. Judge Engoron, a state court judge in New York, gave him a wider latitude, and he allowed Trump to bash the judge and the process and the attorneys. That's not going to happen here. And in this case, he's limited to what he can say. As you correctly pointed out, they can't relitigate the last case. He can't attack E. Jean Carroll. And so what is he going to say? He's not going to be able to go on a political rant. So there really is nothing he could say that could influence a jury here. Best he just not testify at all.
So he says he wants to testify. Of course, he said he wanted to testify at the last E. Jean Carroll trial. So who knows? The judge is saying that he can do so if he wants to testify on Monday, January 22nd, which is the day before the New Hampshire primary. So maybe.
Maybe. Well, he had a lawyer the last time, this Tacopina guy. Yeah. And Tacopina and Trump split up. They just had a divorce, and he's being represented now, Trump is, by Alina Habba. And Alina Habba is gung-ho on Trump testifying. The word was that Tacopina did not want Trump to testify. So this is Trump saying, I am going to do it. I am going to show that the whole process is a fraud, but he's not going to be allowed to testify that way. So in the end, I think he just does what he's done before, which is to promise that he's going to testify, but then in the end, he does not.
So Joe Tacopina is a well-experienced trial lawyer. So there is the reason why he doesn't want Trump to testify. Alina Habba, I don't think, has much trial experience at all. And again, today she was, sort of the same thing that happened in the trial, the New York trial. They seem to be trying to get on the judge's bad side, challenging the judge and, arguing with the judge. I mean, in the New York trial, in the trial that was ended last week with Judge Engoron, I mean, it was crazy, some of the things that they did and said to this judge, who was going to be making the decision without a jury. So I'm not sure about her courtroom tactics.
Now, one of the first things they teach you in law school is never upset the person wearing the black robe and wielding that gavel. Big mistake, but yet they keep doing it, and they got away with it with the Judge Engoron because they knew their goose was cooked in the New York civil fraud case. So what do they have to lose? But by attacking Judge Engoron, I think it gave Trump a false sense of confidence that he could do it again. This is a federal judge. We're talking about lifetime appointments, and these guys run their courtroom like a tight ship, and there's no way that Trump's going to be able to get away with any of this stuff, especially because it is a jury trial. So although he promises he's going to testify, I think this is like other promises where he said he would promise to testify earlier in the New York civil fraud case, which then he didn't do, or in the first trial in this matter, he said he would testify, and he didn't do. Just like he said he would meet with Bob Mueller during the investigation, which he didn't do, and just like he said he was going to have a health care plan that comes out in 2 weeks.
Oh, you're going back far now, but you have a lot to work with. So what's interesting is the counsel for E. Jean Carroll, Roberta Kaplan, expressed concern in recent days that Trump would attempt to turn the trial into a circus, and she suggested the judge be prepared to hold Trump or his lawyers in contempt of court or issue punitive fines and monetary sanctions. Was that necessary for her or just for publicity? everyone knows Judge Kaplan. Judge Kaplan is no nonsense, and he doesn't need, it seems to me, direction from an attorney how to run his courtroom.
I agree. Judge Kaplan is not going to suffer fools lightly, and I do understand why Miss Kaplan, no relation, E. Jean Carroll's lawyer, wanted Trump to say under oath that I will not violate the court's order. But you know what? She also wanted Trump to admit under oath that he committed sexual assault against E. Jean Carroll. And although the jury found it, in our country, we still don't force defendants to incriminate themselves or to say certain things like, I did it, I'm guilty. So I think she was asking for too much, and the judge is not going to go there.
What's unusual in this case is you talk about secret juries, anonymous juries. This jury is so anonymous that the judge issued an order. First of all, he issued an order that bars Trump and his team from saying a lot of the things that they have said before. But he told potential jurors that if they're selected for the trial, they should use fake names when discussing the case with each other. And they wouldn't be permitted to disclose their role to anyone, including family members. So this judge is trying to avoid what we've seen Trump before do, which is issue these sort of either direct or indirect threats.
Yeah, I've seen anonymous juries before, but I've never seen an order where you can't even communicate with each other using your real name. But it makes sense. You want this to be airtight. But it really tells you what kind of political culture we're in now, what kind of country we're in now, where you have the threat of violence against your political and legal opponents that's so pervasive that you need an anonymous jury like you do in mafia cases when you are trying a former president and the leading candidate for president in the Republican side. This should never be normalized. The fact that the person who won the Iowa caucuses has to get on a plane and go to a courtroom where he's already been found liable for sexual assault should never be normalized in this country.
Well, also, increasingly, judges are being threatened. In fact, in the civil fraud trial, before the closing arguments, Judge Engoron was also threatened. And it's very difficult to be able to protect the judges now. Another kind of area where we hadn't been used to that before.
Yeah, judges get their houses swatted, they get threatened, their families get threatened, and, we just seem to accept it. This is not how a functioning democracy is supposed to work. We're not a fascist country, at least not yet, and you're not supposed to threaten your political or legal enemies. But that is what certain elements of the MAGA movement have done. And look, it's not everyone, but you have extremists within the movement who think that anyone who attacks the leader needs to be threatened and really possibly even killed. And that is absolutely unacceptable. And we need leaders to stand up and say, no, this is not to go on any longer.
Now, Trump, what's curious to me, but he's escalated his attacks against E. Jean Carroll. He's repeated what's already been determined in the last trial to be defamatory. So actually, it wasn't after the close of the closing arguments last week. It was during the New York Attorney General's closing arguments. Trump held his own press conference downtown in his building, on the Woolworth building, and he repeated that he'd never heard of her before. He didn't know who she was. So, we're going to keep having trial after trial after trial if he repeats the defamation?
Yes, until the cost of saying these things is so great, where he gets hit with such punitive damages that it's not worth it anymore. So one of two things has to happen for this to stop. Either the punitive damages in this case or a subsequent case has to be so great that he decides it's not worth it, or he actually gets a political hit from it where his poll numbers drop, and then I think he'll back away from it. But right now, neither of these things has happened. He got fined $5 million in the first case. That's not enough for him to change his behavior, and he just won the Iowa caucus. So as long as he keeps winning, he's not going to change his behavior.
Let's turn to, it could come down this week. Let's turn to the case of Trump's claim of absolute presidential immunity in the D.C. Circuit Court. And the question that was heard round the country from Judge Florence Pan about whether or not you could assassinate your political rivals and get away with it because of presidential immunity. Do you think that's going to come fast, that decision?
I do, and you can see by the judge's questioning. It was just such a no-brainer where, of course, a president doesn't have absolute immunity. Of course, they can't kill their political rivals. And look, it's not so funny when it happens to the other guy. So if you give Joe Biden this kind of power, he can cancel the election, arrest Donald Trump, and be president for life. So, of course, they're not going to rule for absolute immunity. Now, the question is, how long will the decision take? I think it'll be soon. The D.C. Circuit Court of Appeals has expedited its review. And then the question is when, it's not an if, when D.C. Circuit rules against Trump, what does the Supreme Court do? I would bet that they're going to defer to the D.C. Circuit and deny review, and then it's game on in the election interference case in Washington, D.C.
I agree with you, but we are in the minority, I have to say. I think we're in the minority. I think a lot of, legal scholars, legal experts think the Supreme Court has to take that case, has to make the decision, but they already have so many different issues related to the election coming up that I'm not sure they want to, go into another one yet.
Right. This is a no-brainer. This is not a hard one. And the Supreme Court, I think, would rather deal with other things. And it'd be easy. I think the reason why the Supreme Court, one of the reasons why they denied their own expedited review, because remember, Jack Smith wanted the Supreme Court to Bigfoot the D.C. Circuit Court of Appeals. And they said, no, we're going to let the D.C. Circuit handle it. I think one reason why they did that was that they were going to defer to the ruling of the D.C. Circuit, knowing they would deny presidential absolute immunity.
And do you think that the decision will just be we're denying absolute presidential immunity, or the judges might have to set out some of the parameters where presidential immunity might apply?
Judges generally like to rule on the narrowest issue possible. Don't get too ambitious, especially when there's an expedited review. So I think they're just going to deny it here. I don't think they're going to go much further, because you do that, then you open it up to more delays. And this case, the one in Washington, D.C. for election interference, is the one that's most likely to be tried before the election. It's, in that sense, the most important case, because all the others, I think, with the possible exception of the New York State case on Stormy Daniels, will be tried after the election. So that's why I think these courts want to get it started as soon as possible.
Now, the Judge Tanya Chutkan, she's sort of put everything on hold, but she hasn't actually, taken it off the docket, the March 5th trial. Do you think that there's any way they could meet that? If, let's say, the D.C. Circuit comes down this week and says no presidential immunity, the Supreme Court says, no, we're not going to review it. How long?
Oh, then it's immediate. I think also the D.C. Circuit will remove the stay of the case immediately, and then it goes to Tanya Chutkan, Judge Chutkan. She will calendar it. Now, it's set for March 4th. I think within 60 days of that is the trial date. That's what I have been saying from the beginning. I'm going to stick to my prediction, and this case will be decided well before the election. And you see the polls, even though Trump won pretty handily in Iowa, still a certain segment that says if he's found guilty in one of these trials, people would switch their vote away from him.
And very quickly, very briefly, what about your Florida trial down there on classified documents? You have a date for that?
It's scheduled to go in May. It ain't going. Here's the thing. Judge Cannon is slow walking this case. That case in my neck of the woods is the strongest of all the 4 cases against Trump. He has no defense, but that case is going to be delayed past the election, and that's a shame.
It is a shame. I'm so happy that you came in today, though, through all the snow. It was hard for me to get in from 79th Street to 59th Street, so I appreciate your coming in from however you got here from Palm Beach.
It's worse. It's frozen rain now.
You'll get used to it. That's so much. Thanks so much, Dave. That's Dave Arenberg, Palm Beach County District Attorney. Coming up next, we're going to be talking about just what's happening in Congress as far as spending. I'm June Gross, when you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now on the S&P 500 index down 34 points. That is a drop of 0.7%. We have got the Dow lower by 375, down by 1%, and the Nasdaq Composite Index down 99. That is a drop of 0.7%. 10-year yield 4.07% on the 10-year, with a 2-year that's yielding 4.23%. Gold down $28 the ounce to 2027, a drop there of 1.4%. And West Texas Intermediate crude down 0.6%, 72.23 for a barrel of WTI. Shell has halted oil tanker transits through the waterway, through the Red Sea waterway, as Houthi militants retaliate against U.S. and U.K. airstrikes in Yemen. Oil stocks are trading lower, and right now we do have Shell shares among the oil majors also declining. Shell down now by 3%. Also keeping an eye on JetBlue and Spirit. JetBlue and Spirit say they are reviewing their next steps. This after a Boston federal judge said no to their proposed combination. JetBlue now higher by 6.7%. Spirit shares, they are plunging 46%. Recapping, stocks lower, low of the day right now. S&P down 33, drop there of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew. Well, in the first votes cast in the 2024 presidential election, the Iowa caucuses last night, Donald Trump tightened his grip on the Republican presidential nomination, coming in with a commanding win of 51% of the vote. Rivals Ron DeSantis and Nikki Haley, not even close. DeSantis coming in second with 21.2% and Haley with 19.1%. So very, very close. Joining me now is Nathan Dean, Bloomberg Intelligence Senior Government Analyst. So, Nathan, what should investors and Wall Street start paying attention to now that it looks like it's going to be a Trump-Biden matchup?
Yeah, so, you hit a great question there, because I think investors to this point have really just somewhat ignored this idea of a Biden versus Trump matchup. But with President Trump's victory in Iowa, and obviously the race going to New Hampshire and South Carolina and so forth, it's feasible that this could be wrapped up by Super Tuesday. Now, what does this mean? Well, first off, these are both candidates that we know. I mean, we know the policies of President Biden. We know the policies of President Trump. So at least that's on the optimistic side. But on the other side, this is an unprecedented election. President Trump has called for a 10% tariff, if you will. President Biden, if elected, could go for another version of his Build Back Better bill. So we have lots of time between now and the election, and there's going to be a lot of headlines between now and the election. But after that Super Tuesday, when it's likely that President Trump wraps up the nomination, at least those of us who are looking at the policies and trying to determine the market impacts, we're going to have to go back to their previous years, analyze it, and then see what it ultimately means for a variety of industries.
So is Trump's lead so commanding at this point that we should just ignore Haley and DeSantis, or is it worth paying attention to them as well?
I wouldn't say ignore anything that happens in Washington. I mean, anything can happen. I mean, I will say this, that, Governor DeSantis's ability to come in second yesterday means that it's highly unlikely he's going to drop out before New Hampshire. And so you're going to have another situation where Governor DeSantis and Governor Haley are going to be splitting some of the, say, non-Trump vote, if you will. So it certainly is, a good thing for President Trump to keep continuing to try and win these races. But I will say that probably around Super Tuesday, we should have clarity, whether it's President Trump has the nomination or somebody like Nikki Haley has the ability to defeat Donald Trump and put a little bit of chink into that armor, if you will. But from the market perspective, we are going to have some form of clarity come March. And I think that's going to bode well for markets to try and at least have an idea of what each individual, Biden or Trump, would do. If president, we're just not going to know who's going to win probably until the day or maybe a couple days after the election in November.
So assuming the Biden-Trump rematch, we've seen that the polling is very, very close, at this point at least, with Trump actually showing a slight lead in some polls. So how do people sort of, start preparing when the margins are so thin that, anything seems possible?
I think you need to do to essentially analyze both scenarios. I mean, if we look back at the previous race, I think it was around 40,000 Americans in 3 states were the ones that ultimately decided who was going to be the victor. And in this case, I think there's around 6 or 7 states that are somewhat in that purple, non-blue, non-blue, but a mixed state that could go either way. So what we're doing is we're preparing for both scenarios. Now, another thing that investors should look about is that you're going to have the headline risk of the election. If President Trump wins, people are going to want to say, okay, what is he going to do on day 1? What is he going to do within the first 100 days? And what is he going to do, say, over the next 4 years? What we are telling our clients is just remember, the power of the presidency is much stronger when it comes to foreign policy and defense and national security than it is trying to implement either regulatory goals or certainly congressional goals. Executive orders are really good for becoming flashy and getting a lot of headlines, but executive orders usually don't have much teeth associated with that. So the national security and foreign policy aspect is the one that's most important to pay attention to, at least within the first 10 to 15 to 20 days. Then I would go to the regulatory route because the power of Trump's regulators are going to be shown there.
Let's turn now to the possible stopgap deal. And we have the text. The Senate is going to move on that this week. Are you confident that we can avoid a shutdown?
Yeah, so last week I gave the 70% chance that we were going to have a shutdown. Obviously, I'm not feeling that today. And if anybody ever wants to come to the Bloomberg Pantry, I'll buy you a Bloomberg coffee for it.
Okay, they're free. We should just mention they're free. Go ahead.
Exactly. But what I will say here is that the negotiation that's taking place essentially kicks the can from January 19th and February 2nd to March 1st and March 8th. Now, this is a little shrewd because if those of you who may remember, the State of the Union is on March 7th. You're certainly not going to have a shutdown during the State of the Union. And we have seen statements from moderate Democrats that they would be willing to protect Speaker Johnson if he were ever to get into a situation where their votes would be needed to retain his speakership against the House Freedom Caucus. So what I will say here is the odds for a shutdown has gone tremendously down. But April 30th, if we're still operating under a continuing resolution, then you have a 1% sequester. Nobody in Washington wants that. It's highly likely we won't have that. But that's going to be the next key date to keep in mind here, because if we're operating under continuing resolutions, come April, there's another set of negotiations that's going to have to take place, and it may not be as easy as just kicking the can down the road.
All these continuing resolutions, all the kicking the can down the road, when is there going to be a time when we're actually going to see Congress settle this before we have to go from one can kick down to the next, to the next, to the next?
This has been going on since I arrived in Washington in 2010. So, unfortunately, this is just the way that things works. I will say, however, I am confident that they're going to avoid the sequester and they will come up with a deal, at least to fund the fiscal year of 2024, because nobody wants to be seen as ungovernable in an election year. And there will come a point sometime this summer where all 435 members of the House and 1/3 of the Senate, and certainly the presidency, are going to want to stop paying attention to what's happening here in Washington, and they want to get out to their districts, and they want to run their campaigns and ensure that they win their elections. So eventually, probably in that April-May timeframe, come up to a deal. They'll avoid the April 30th sequester. They'll kick the can to after the elections through a full year fiscal year continuing or a funny deal, or maybe it's just another continuing resolution. But they kick the can to 2025, and they say, you know what? It's election season. We'll figure it out after the elections.
So what do you think the role of the conservative Republicans, the House Freedom Caucus, what will their role be in the negotiations?
So, they lost a lot of power, I think, when Speaker Johnson pushed back and said, we're going to keep our $1.66 trillion headline deal that he had agreed upon with members of the Senate. They wanted him to walk back from that deal, and he essentially just said, no, this is the deal that we're working with, and sort of called their bluff. Said, look, if you want to oust me, it only takes one member to start that process. But we've seen support from moderate Republicans and certainly Speaker Johnson allies saying we can't go down that path. And we have seen statements from moderate Democrats that if given the right deal, they'd be willing to help the speaker out. So the House Freedom Caucus really has lost a lot of leverage here. And now I think what they're going to do is just pivot towards the elections to try and shape what the future of the Republican Party looks like. Certainly, if President Trump is the nominee, it's going to be President Trump's party. And certainly if he wins, obviously the Republican Party continues to be President Trump's party. But for the rest of 2024, at least in their interactions with Speaker Johnson, the House Freedom Caucus lost a little bit of leverage.
It really says something that House Democrats are willing to support someone as conservative as House Speaker Johnson.
Yeah, absolutely. I mean, but that just also shows the state of politics of where we are today. And I should also be saying, this was just a couple of members talking out loud. This was not strategy. And certainly they're going to make sure that there is a deal, that they get something in return for this. But I don't think it really serves anybody at this point in an election year to have this type of, controversy, turmoil, if you will, happening in the House. Just because people are already fed up with Washington. I mean, the congressional approval rate has been low for many, many years now. I'm not sure it can go any lower. But the most important thing for investors to note here is that there is a process, that we don't anticipate much happening past this government funding bill. There could be a couple pieces of legislation. And we anticipate in the first half of this year, the Biden-era regulators to start proposing and finalizing all of their key rules. Because if there is a chance the Republicans take the House, the Senate, and take the White House, the Congressional Review Act comes into play, and any regulatory rule that is finalized, say, after May or June, is at threat of being overturned.
Thank you so much, Nathan. That's Nathan Dean, Bloomberg Intelligence, Senior Government Analyst. Okay, now let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, June. The U.S. has launched a new strike today against the Yemen-based Houthis, hitting anti-ship missiles in the third assault on the Iranian-backed group in recent days. This is all according to U.S. officials who say the overnight strike destroyed 4 Houthi ballistic missiles that presented an imminent threat to merchant and U.S. Navy ships in the region. Ukrainian President Vladimir Zelensky says Vladimir Putin is a predator, and he told an audience of global finance and political leaders that aid to Ukraine is worth the investment. Speaking at the Economic Forum in Davos, Zelensky said Putin embodies war.
Putin is frank about what he wants, what he does, and who his targets are. His answer to the duration of the war is always war, without an end, and he wants in this way.
Zelensky is hoping to win support from investors to help rebuild Ukraine. Prosecutors in Suffolk County, New York, say they've analyzed new DNA evidence linking the suspected Gilgo Beach serial killer to a 4th murder. Rex Heuermann pleaded not guilty in court today to the murder of Maureen Brainard Barnes, who disappeared in 2007. Suffolk County DA Raymond Tierney says analyzing hairs found in the uncovered bodies has led to the new charges.
Nuclear DNA existed in the hair since they were first recovered in 2010. And now the science has caught up. I would say that's a good break for justice, a good break for the investigation.
Suffolk County.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We do have the Dow, the S&P, and NASDAQ all in the red. The S&P trading close to session lows. Right now we are looking at a 29-point drop on the S&P. That is a decline right now of just about 0.6%. We've got the Dow lower by 350 points down there, down 0.9%. NASDAQ lower by 79, decline of 0.5%, with the NASDAQ 100 index down 66, drop there of 0.4%. 10-year yield 4.06%. The 2-year 4.23% right now on the 2s, 10s. We have got spot gold down 1.4%. 20.27 the ounce, and West Texas Intermediate crude down 0.4%, 72.36 per barrel of WTI. Bitcoin up 1%, 43,123 on Bitcoin. So the Dow, the S&P, NASDAQ all in the red. Bond yields are rising, stocks are falling on speculation. Wall Street's bets on aggressive Fed rate cuts have gone too far. Bank earnings this morning, specifically Goldman Sachs profit topped estimates as its equities trading unit posted a jump in revenue that was triple what analysts were expecting. Goldman Sachs shares little change right now, up less than 0.1%. Also out this morning, Morgan Stanley, that stock now lower by 4.6%. Gerard Cassidy is U.S. bank equity analyst at RBC Capital Markets.
When you go into the trading side, similar to the others, we saw mixed results today. Equity trading was strong, FIC trading not so much as against expectations, and that was similar to what we saw on Friday. So overall, the quarters in capital markets were decent quarters. They weren't blowout great quarters, but they weren't real problems either.
And you can hear more of the conversation with Gerard Cassidy on the Surveillance podcast. You can download it wherever you get your podcasts. Again, Goldman shares are up 0.1% right now. As for Morgan Stanley, down by 4.8%. S&P down 29, lower by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound on Bloomberg Radio.
June Grasso sitting in for Joe Matthew. The drowning deaths of a woman and 2 children in the Rio Grande River as they tried to enter the United States from Mexico on Friday have intensified tensions between Texas and the federal border officials. U.S. border officials say Texas officers prevented federal border officials from helping them, and that is in dispute. Joining me is Leon Fresco, a partner at Holland & Knight and the former head of the Office of Immigration Litigation in the Obama administration. Leon, what happened? What do we know happened on Friday? Because it seems like there were conflicting reports.
Well, there were conflicting reports, including one from Congressman Henry Cuellar, who's the esteemed congressman along the border. And so the Department of Justice actually filed a brief in the Supreme Court that actually discussed this issue slightly more. And it seems like there were 6 migrants that were actually in distress. But 3, by the time the Mexican government reported this to the Department of Homeland Security, and by the time the Department of Homeland Security would have responded, it seems like, even if Texas had let them in, 3 of them would have already been found deceased, unfortunately. There were 2 others that were rescued by the Mexican government that presumably would have been rescued by the Border Patrol had they been allowed to enter. But there is no dispute that the Texas state officials are blocking this park in Eagle Pass, Texas, and not permitting the Department of Homeland Security officials enter the park, which the Department of Homeland Security officials say is a violation of their right to enter in times of emergency, that they have a federal right under the Supremacy Clause to do that.
And do you agree? Which side do you agree with? Does Texas have the right, or does the Department of Homeland Security have the right?
It's clear that if there's any kind of transnational emergency that's happening on the border, that the federal officials have the ability to access the border to be able to respond to that transnational emergency. Where they can't necessarily do things is if they were just patrolling this park, and the state of Texas said, this is our park to patrol, the federal officials don't have jurisdiction here, that's fine. But in these situations of an emergency, there's no doubt that the federal government has the authority to enter. And so the Texas government not allowing them to enter will probably lead at some point to some sort of injunctive relief that will then, if it happens again, could lead to contempt of court findings.
So Texas Governor Greg Abbott has been escalating the tensions with the federal government over immigration at the border. Was this part of the new law that's been passed that hasn't gone into effect yet, where Texas says that its local officers can arrest migrants, which is normally what is a job for the federal government?
Well, this is part of that overall strategy. The law itself, what it's going to do is it's going to say that if you're not in Texas legally, it's a misdemeanor that you can then be taken to the border. And if you don't actually cross back into Mexico, you can be rearrested again for a felony. And so all of these areas that are being enclosed are part of this overall strategy to be able to have places to take people to along the border and say, here are your two choices. Either go back into Mexico, or if you try to come back in, we will arrest you under the Texas law. Of course, the legality of that Texas law is currently under review at the courts and is probably going to work its way all the way up to the Supreme Court.
So, Leon, this is all part of the bigger problem of immigration and the security at the southern border. And in the Iowa caucuses, that was one of the major concerns of the caucus goers there, of course, Republicans, but one of the major concerns. What is the status there? We were talking before about negotiations over immigration among, lawmakers. I haven't heard about that for a while. What's the status of that?
Well, one of the biggest problems happened the last few days where House Speaker Mike Johnson said that he thought that there wasn't any legislation that would be able to be created by this Senate group of negotiators that would be acceptable to the House, such that this needed President Trump to be able to come in and be able to solve this problem. And that what President Biden needed to do was just unilaterally act with any powers that he had, but that the legislation to solve the border problem would be too weak if it was the current legislation that's being talked about by the Senate. I don't think that's going to be the last word. I think that's posturing in many cases. I do think the White House wants a deal. The White House has actually brought in all the relevant negotiators and chairmen to speak later today at the White House to try to get a deal. The White House very much wants a deal. They're negotiating in areas that make many very Democrats very uncomfortable with regard to what kinds of limitations they're willing to accept along the border. But at the end of the day, it's going to come down to, can the Senate pass something? And if the Senate can pass something on a bipartisan basis, then they can make the House look really badly. If they refuse to pass something, then it becomes evident that the House would be the ones blocking progress.
And there are some areas where the Senate negotiators have come to agreement, right?
Absolutely. The Senate has some spots with regard to sort of a re-implementation of Title 42 authority, which was the authority to automatically expel people at the border who don't come in through the ports of entry, who actually try to come in illegally in between the ports of entry, with limited exceptions for very extreme humanitarian cases. Also an expansion of detention for those kinds of people who enter the United States and are waiting for their cases to be heard. But the area that's not yet resolved is there are these 30,000 people per month that the Biden administration is allowing legally to enter the United States from Cuba, Haiti, Nicaragua, and Venezuela, that the Biden administration argues is necessary so that people don't enter illegally, so that people wait in their countries and apply for this program. The Republicans want that program eliminated, and they also want it to be eliminated that basically under almost all circumstances that the Biden administration couldn't find someone with urgent circumstances on the border and admit them in legally, And so those two areas are under debate about whether those will be accomplished or not.
Thanks so much, Leon. That's Leon Fresco, a partner at Holland and Knight. I'm June Grosso, and you're listening to Sound On Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pell at the World Economic Forum underway in Davos. Bloomberg has been speaking with top CEOs across a swath of industries. This morning, we caught up with Intel CEO Pat Gelsinger.
Well, my day job is running Intel. And, with that, making sure we rebuild our process leadership, our product engineering, rebuilding our customer relationships. But I've had to spend a lot more time in Brussels and in the Capitol Hill, right, on these topics than I certainly would have envisioned, right, when I took the job. But it's been fulfilling as well, because I think we've created the two most significant pieces of industrial policy since World War II. We've accomplished that in the last couple of years, and I think fundamentally we are rebuilding the supply chains of the West. I'm proud of that.
Intel, by the way, reports next week. Shares today down 0.7%. Yes, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Chip design company Synopsys has agreed to acquire software developer Ansys for about $35 billion in enterprise value. Shares of both companies are lower. Synopsys down now by 1.5%. Ansys trading lower lower by just about 5.1%. Some of the other stories that we're following: Apple planning to remove its blood oxygen feature from its latest smartwatches, the Series 2 and Ultra 2, to get around a U.S. ban of the devices if an appeal of the decision fails. And those are our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew as he makes his way in from Iowa. And now let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, June. The snowless streak across much of the East Coast is over. Residents up and down the Atlantic seaboard are digging out from snow and dealing with frigid temperatures. Bloomberg meteorologist Rob Carolyn says the snow could be lingering for a while in some spots.
An area of low pressure passing southeast of New England this afternoon will keep snow going across much of southern New England and also across upstate New York. Looks like accumulations across New England will average an additional inch along the coast. Will there be a changeover to rain during the afternoon? Inland locations could see an additional 2 to 4 inches of snow on top of the inch and a half they've already received.
Bloomberg meteorologist Rob Carolyn says conditions should improve by the weekend. Winter weather continues to cause headaches at airports across the country. So far, over 2,100 flights within, into, or out of the U.S. have been canceled. More than 6,000 have been delayed. Among the airports heavily impacted, Chicago O'Hare, Reagan National, Houston Bush, and New York LaGuardia. The architect charged in a string of murders known as the Gilgo Beach killings is now being accused of a fourth death. Authorities say Rex Heuermann has been formally charged with the death of a Connecticut woman who was the mother of two whose remains were found along a coastal highway in New York. Heuermann pleaded not guilty in court today. Well, you can add a new name to the list of EGOTs. Those are entertainers who win an Emmy, a Grammy, an Oscar, and a Tony. The new name? Yep, that's Sir Elton John. He won an Emmy last night to earn EGOT status, the 19th entertainer on the list. It was for Elton John Live, Farewell from Dodger Stadium, that aired on Disney+. Other winners last night: Succession won Best Drama and multiple other nods, along with Bear, that also won several awards, including Best Comedy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, June.
Thank you so much, Nancy. And coming up now, next is Bloomberg Business Week with Tim and Carol.
I believe you need a da-da-da-da.
Yeah, oh, gee.
We're coming off the
all right.
Emmys.
Next time,
Little jazz
really.
hands.
I was dancing
I
to Tiny Dancer, though, I have to say. You know, you can't beat that.
Things that we just love about you.
So what's coming up?
Juno, we're talking about the Emmys.
Yes.
Okay.
Well,
then I'll stay.
No, we're not.
It's not our top story.
Succession, The Bear.
I
Beef.
could talk about
the recent Succession auction.
That was
an
huge.
auction?
Yeah, the HBO auctioned off some of the stuff from Succession.
Yeah.
Carol sent me this article. I had
crazy.
no idea they did this. And people paid a pretty penny for some of the stuff on the show.
That is wild, because I'm trying to think of what on that show.
Are you kidding? It's
was-
the wardrobe.
The
the wardrobe.
But
Burberry bag.
Okay, wardrobe. I was thinking
Sorry,
about things
it's not
on the
just
show.
wardrobe. It's like, when they did Boar on the Floor, they used fake sausage. That was auctioned off.
That's true.
They did.
I did watch it, but I was very depressed
Kieran
at the end.
Culkin's
so.
note cards from
Just-
I'm not going to.
Just
I don't want any
so
spoiler alerts.
the Bloomberg audience doesn't run away and say, is that all they're going
Yes.
to talk about? We
No,
are going to
okay.
talk about the movement that we've seen certainly in the markets, because it does seem like Mr. Waller of the Fed, he's the Fed governor, and he basically kind of maybe threw some water on these aggressive expectations that the Fed's going to be really, really aggressive. We've seen quite a move up along the yield curve for U.S. Treasury yields, moving up back above the 4% mark, and equities are just trying to figure it all out, June. June's like, can you just give me more Succession?
No, I was going to say, are there any legal stories that I should come back and chime in on? But there's not much happening
There is a
today.
little bit of a legal story. We're talking about the pressure that that Elon Musk is putting on Tesla's board for pay compensation.
Well, still waiting for that opinion. from
Exactly.
the judge.
So he wants
How
the
long
next,
is it taking her?
So that was the 2018 compensation package that Musk got $55 billion. Vaulted him to.
She sighed. She sighed.
It's a lot of money, but he wants more equity in Tesla.
It's just like
or else.
perspective, everyone. Perspective, Elon.
Exactly.
Anyway,
Exactly.
It's always interesting. Some would say perspective, Elon.
Absolutely. We'll all be listening to Tim and Carol coming up. I'm June Grasso, sitting in for Joe Matthew, who will be back tomorrow if he gets his plane from Iowa sooner or later. All right. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio. We are on YouTube. We are on Bloomberg Originals. We are on Bloomberg Radio. It is Tuesday, January 16th. Carol Masser along with Tim Stenivek. And I got to say, my thought for today, when I was reading in, I posted it on X this morning, came courtesy of our Markets Live blog. Stocks ignore risks that will precede rate cuts. And it feels like Chris Waller.
Yeah, that was then. That was then. That was before Waller spoke. Ignore no more. Bonds sliding, sending yields higher. Stocks wavering. We're down about 0.5 percentage point on the S&P 500 right now. Yeah, it followed comments, Carol, you just mentioned them, by Fed Governor Chris Waller, who seemed to push back against market expectations of an aggressive Fed easing cycle. We're starting to hear more of that, not just from members of the Federal Reserve, but also from market participants.
Yeah, exactly. The drumbeat started certainly late last year. Katie Kaminsky is going to be with us. This is going to come as no surprise to her because she was calling for 6%, right, on that 10-year when we talked to her in the fall.
That was back in August, yeah.
Yeah, or late summer, forgive me. So we'll see what she has to say.
We got to 5.
We did. But it's interesting. And so maybe this move back up in bond prices may be no surprise to her. Also ahead, another batch of big bank earnings for investors to take stock of. We'll have the key points that you need to know about when it comes to Morgan Stanley and Goldman Sachs results today.
Plus, we've got a pessimist guide to global economic risks this year. Forget the soft landing and the cutting interest rates to support markets around the world. We're going to talk about the risks.
We are indeed. Elon Musk, meantime, Tim mentioned this with June, our conversation with June Grasso. He's pressuring his board. He wants more stock. That's it, bottom line.
And a big chip deal today, one of the largest this year, and the year is young, we should note. Synopsys buys Ansys. We'll have more details on that.
Yeah, interesting. We've also got the 5 ETFs to watch this year. It's not just about spot Bitcoin ETFs, everybody.
There are other ones out there.
Yep.
And on a lighter note, where to go literally as we talk travel trends in 2024 with Haley Berg, the Hopper lead economist.
Where do you want to go in 2024?
Yeah, I'll think about it and get back to you. There's so many places I want to go. I want to go to the American West, do some cycling.
Oh, that's a nice idea.
Yeah, that'll be fun.
All right, and then speaking of travel, how about some skiing? Peak Ski co-founder and CEO Andy Wirth and another co-founder of Peak, Olympic gold medalist, you'll know his name, Bodie Miller. He is also Peak Ski's Chief Innovation Officer. They're going to stop by on their company and how they are doing things differently, really kind of shaking it up, some innovation, if you will. You like skiing just a little bit.
Colorado's got some snow.
It does. You kind of need snow, don't you? All right, we're talking markets. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic here with Katie Greifeld, and we're joined right now by our colleagues Carol Masser and Tim Stenivek. Yes, I remembered your name, Katie Greifeld.
Okay? You got it. You got there.
It's a long weekend, and it was a really long weekend for you.
I had to turn over. Oh, it's Katie today.
It's me. Many syllables.
Anyway, I'm happy to have Katie, happy to have Tim, and happy to have Carol Masser here as we welcome our audience.
I made the
across
list.
All of our Bloomberg platforms. That was not in order, by the way, of preference.
I figured. All right, so a really important story for us to get to. We know we're going to get one from you guys in just a moment. In the meantime, we wanted to highlight a recent survey from the New York Federal Reserve Bank. More Americans apparently are focused on paring down their debt. Specifically, they said if they got an unexpected 10% in income, what they would do, 38.4% said that they would use the extra money toward debt payments. That is the highest reading since August of 2016.
We should also note that the share of respondents who would spend or donate this sudden windfall, Romaine, dropped to the lowest on record since the series began back in August of 2015. So what that tells us is that the consumer is facing increased pressure. U.S. households are facing increased pressure, and they're relying more on credit cards in recent months.
Yeah, this is interesting. I mean, I guess on one hand, it's encouraging that people would focus on addressing this before, I guess, it got too out of hand. Of course, the flip side of that is that means that people are going to be spending less on some of those discretionary things that kind of keep this economy afloat. So you do wonder how that all sort of intertwines.
I have some lighter fare for us because
I said it was a really important story.
it is important. Let's talk about Succession because we are in awards season and Succession just swept the Emmys last night. It won Best Drama for the third time in 4 years. HBO once again claiming the crown as the premier programmer in TV. I like the description of Succession in this Bloomberg News article, a darkly comic show. I loved Succession so much. I assume everyone on this simulcast has seen Succession at this
Yeah,
point.
but no spoilers.
Yeah,
Okay.
yeah, no spoilers. I can't wait for the next season. But what's going to happen?
I'm the eldest boy.
Oh. This is great. I mean, some other things. One, as you see in the background there in the white tux, that's the lead actor from The Bear. They did well as well. Have you seen that show?
Yeah, you know, I watched the first season. I'm like a few episodes into the second season. It's not really grabbing me. I don't understand how it's a comedy. I know that there are some jokes in there, but more than anything, it just stresses me out.
I think what's interesting about this story is that, and they write about it, is that you've got Hollywood, you've got so many of the kind of traditional folks who have been creating content and media for a long time, and they are not necessarily the ones that are being recognized with awards. And you've got HBO, I think the stat was that they earned the most nominations of any network, captured the most awards overall. So HBO really a standout.
And there was concern years ago that HBO would sort of lose its magic with Richard Plepler leaving years ago and so many different owners of HBO and what the future of HBO is. So turns out they can still, produce very, very high quality content.
I think it's interesting, yeah, and all the media companies are already crowing about how many of these various Emmys that they won, Netflix and the like here. I thought it was interesting, though. There was a great story in the New York Times today, just like one of our competitors. It really talked about kind of the end of peak TV, the idea that, in 2023, you had something like a grand total of 599 scripted programs be released last year, and that basically we'll never see that number again, at least not anytime soon. That basically we've already seen the retrenchment. So I guess that'll make picking an Emmy winner a little easier over the next few years.
Maybe hopefully quality, not quantity.
Yeah, I was going to say also for the viewer, maybe that will make things a little bit easier. I can't decide what to watch. I mean, we sit down for dinner, not to bring you into my living room, and we just scroll and try to pick a show.
Fargo, the new season of Fargo.
I don't know.
Wait, you do this while you're eating dinner?
Good.
Please
No,
bring us
like-
into your living
like-
room.
Do you actually talk to each other, or you just
We talk about
on
what
your
to
phone?
watch on
Cats
TV.
there, like watching too?
Hey,
Yeah, it's a cozy scene.
before we go, did you know that HBO auctioned off some of the stuff from Succession?
No.
Yeah, I saw that.
And
Yeah.
they made a lot of money, like $600,000, just auctioning the stuff off.
That's
You could have
cool.
bought the sausages that were used
Yeah.
and bore on the floor.
Now, does that go straight into David Zaslav's account?
It's
How does that
half
work?
to HBO and half to the auction house, I believe.
Okay.
Maybe
Fair
not
enough.
split half and half, but
Okay.
yeah.
By the way, I keep my phone by my side because I'm waiting for them to call to let us know that the simulcast here on Bloomberg Television has now won that daytime Emmy. But maybe
It's
next
coming.
year.
It's coming.
I don't know.
There's not a category that could fit us.
Not yet.
We're
No,
genre.
I like that.
We're genre bending.
Tim, you're going to make
okay?
a great PR person one day.
One day.
Can we create a category? Didn't the Globes create a category this year?
Maybe sooner than later if we don't end this simulcast right now.
All right, we're going to end. Otherwise, the producers are going to yell at us. All right, that's a wrap, guys. We're going to see you in less than an hour's time. We're going to wrap up the trading day on this Tuesday. Radio, TV, YouTube, Bloomberg Originals. We'll see you for Beyond the Bell.
Just like money in my pocket, baby love. Take that to the bank. I know how to treat a
Speaking of taking to the bank, you mentioned that auction, 236 lots of memorabilia from Succession. That's how much.
Here's what you could have bought. Lucas Matson's vape device, Roman's Walmart kids t-shirt. That sold for $1,875.
And, drum roll, the
You'll talk about
ludicrously capacious Burberry bag, which was carried by an outsider to a family event, sold for $18,750, which made the brother-in-law,
Yeah, Tom Wamsgans.
yep, famously quip, "What's even in there, huh? Flat shoes for the subway?" It's a little attitude.
That was a good line from the final season.
It's funny. What?
Have you seen it? It's very good.
No, it's funny. I started to watch when I used to do the show with Jason Kelly, who was obsessed with it, loved it, and was like, "You're not watching." I started to watch it, and I guess it just so overlapped some of the real families that we cover.
That's a good
And I
point.
think I just kind of
By
like,
design,
stepped away.
Carol.
Yeah,
By
no, I
design.
know, which is what makes it just kind of even more a gem or interesting or fascinating. But yeah, I mean, think about HBO though. I remember when watching Sopranos, which are now 25 years old, and Sex and the City. It was like a night. My husband, it was destination. We were like, what time is it? We'd sit down. That was our Sunday night of watching those two programs.
It's not. It sounds like I'm joking, but I'm not joking. People, the ad campaign was, it's not TV, it's HBO, and that was real. That was a real thing. Yeah,
like,
it was a real
the sound
thing.
and like their logo.
I think what people forget in this age of abundance when it comes to PTV, like Romaine was talking about, is that this high quality content can now be found in so many different places, including Netflix, including Hulu. Disney Plus has some good stuff for grown-ups, like not just kids. It's not, but HBO really invented that category of prestige TV.
Well, it was like, do you have HBO? Like growing up, like it was a big deal if your family had HBO. The other thing I would say, and I think this just kind of sticks with me, when Disney tries to figure its way forward and what it wants to do under Bob Iger, who has come back and they've been cutting jobs, looking at the business, but when they, I guess the talk, or whether analysts have considered it or whether they have internally, like this idea of getting rid of the ABC-owned stations says to me a lot, because you wanted those stations. You tuned in, you were watching those networks. You were often kind of a certain network family. You watch their news. It's just such a different formula today. I have no allegiance to any station or network or even streaming service. I'll go where
Present
I want.
company excluded, of course.
Well, Bloomberg, yeah, top of mind. Yes.
Yes.
Whoops, yes.
Yes.
No, but I mean, yeah, and it's just kind of interesting how things have changed. And there's so much that at some point I know in our house that we're like, do we really need this?
Who
Do
were we
really
talking
need
with
that?
last week, Carol? Maybe last week or the week before, who talked to us about the demise of local news and how, this is not a new story, but in a lot of areas of the country, there is no local news left.
My husband actually says this.
Your husband says this. So people are getting their news from social networks. They're getting their news from Facebook. A lot of news coming from TikTok these days for people.
You don't cover town hall meetings. You don't really.
But it also
know
doesn't have
what's
the
on
same
ground.
editorial oversight because you're
Right.
getting fed what appeals to you algorithmically, not necessarily what an editor in a newsroom deems as important. And people see pluses and minuses for both of those things, but certainly something is lost when you're not flipping through the newspaper and sort of stumbling into something that you didn't know you would be interested in.
Right, and not just skimming headlines, but actually reading a story in its entirety, taking the time, or then digging deeper. I mean, what's kind of cool at Bloomberg, and I know a lot of news organizations do, but you start reading and then you link to other ones, so you get deeper and deeper into a story to kind of understand size and scope, if you will, which is, I think, many would argue is really important to understanding issues in an environment where we are so divided, and people maybe don't want to see kind of either facts or other opinions, if you will. All right. So listen, one thing for certain is the big banks have reported. We got another drop today. Goldman Sachs topping profit estimates as its equities trading unit posted a jump in revenue. It was triple what analysts expected, capping off what it's pitching as a year of transition. We did see Goldman shares trading slightly higher today.
And then there's Morgan Stanley. Shares sold off the most in 3 months as its traders fell short of expectations. Also, executives said, Carol, that lower wealth management margins may stick around. A nice welcoming gift to Morgan's new CEO, Ted Pick.
Yeah, have fun. Morgan Stanley shares down 4.7%. Goldman just up a hair, just up fractionally. So let's get to it with CFRA Research Global Director of Industry and Equity Research, Ken Leon. He's on Zoom in New York City. Ken, by the way, has a hold on Goldman and a buy on Morgan Stanley. Ken, good to have you here. What are the key points for Goldman? What are the key points for Morgan Stanley?
Well, they're in many of the same businesses, but really the direction of these companies are a little bit different. Goldman, of course, is really downsizing or closing the book on a failed strategy, which was the consumer area, and they're looking to get in the more positive areas such as alternative investment and private credit. Morgan Stanley, it's just because of market conditions that we did see a weak fourth quarter for investment banking, but their strategy is firmly in place and think that they will execute well in 24.
Well, now that all the banks have reported Friday and then today, what's the way that you could characterize the quarter that was and the quarter that is?
So what we're seeing is still a healthy U.S. economy, and that speaks to both loan growth and also credit loan risk, whether it's in commercial or consumer. That held up incredibly well. We also saw the opportunities for these banks to gain wallet share from some of the smaller banks, and part of that was really the effects we had from last March with the bank failures. On a global basis, all of these banks that do investment banking are really getting the lion's share of their revenue from the U.S. And the U.S. is expected to still be the driver for growth in 24, Asia next, and then perhaps Europe. So it's an interesting time to look at these banks, particularly since they're not firing on all cylinders. There is some doubt in terms of both the economic outlook and also investment banking. But their strategy has led to durable assets, more predictable revenue and cash flow, and return of capital. I think the only dark shadow for these banks as we progress in the early months of this year would be what we're hearing from Washington in terms of bank regulation.
Hey, Ken, you have a hold on Goldman and a buy on Morgan Stanley. Last year, Morgan Stanley gained about 10%. Goldman was up more than 12%. Why the hold on Goldman? Why the buy on Morgan?
So we were negative on the strategy that Goldman had. It was a major distraction of time for management, not only for last year, but the last 3 years. And in terms of right-sizing the ship, Goldman finally did that. But again, these are highly competitive markets, whether it's the capital markets or moving into some of the more attractive areas of investment and asset management. And Morgan Stanley is not distracted.
As you look forward, what are you going to be watching out for these names in particular that you think investors, and I'm thinking about our audience who are listening and watching right now, should kind of keep an eye on? Goldman, Morgan, but the whole group.
So I think the key point is that we did see in the financial sector, but also the large banks, outsized gains in the fourth quarter of last year. So we expect the stock prices to trade sideways, perhaps for a month or two, kind of consolidate their positions. And then as we see closer to a Fed rate cut and what it means in terms of whether it's 3 or 4, that might create the signal of a risk-on environment, both in the boardrooms for M&A or in other aspects of investment banking.
So as long as the Fed isn't too aggressive, right, which signals things are going south, it should be at least initially positive for the banks. Bottom line, 20 seconds here.
We're pretty confident because looking back at 2019 to 20, when the Fed did raise rates, bank stocks, the large bank stocks of quality, did well.
All right, good to know. Great to check in with you, so appreciate it. Have a great week. Ken Leon, Global Director of Industry and Equity Research at CFRA Research on Zoom in New York City, as we said. Hold on Goldman, buy on Morgan, but breaking down the results. If you want to know more, do check out our complete reporter analysis of those names and their reporting. Just head to Bloomberg.com or, of course, the Bloomberg Terminal. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all in the red. 39 minutes to go ahead of the closing bell. S&P 500 index down 24 right now, drop of 0.5%. The Dow is down 307, a decline of 0.8%. NASDAQ, the composite index, down 53, a drop right now of 0.4%. 10-year yield 4.06% with a 2-year right now 4.22%. Gold down $27 the ounce, a drop there of 1.3%. West Texas Intermediate crude down 0.5%, 72.27 for a barrel of WTI. Well, this morning we heard from Goldman Sachs and Morgan Stanley. Up next, regional banks. Allison Williams follows banks for Bloomberg Intelligence.
What we have seen, which makes me a little bit worried about the regionals, so the commercial real estate business, office, we've been talking about it. We know it's going to be a long story, but we are seeing those charge-offs start to come through.
And this morning we had shares of Goldman Sachs up by 0.1%. Morgan Stanley, after this morning's earnings report, down now by 4.2%. And the deal that is not happening, JetBlue Airways cannot complete its $3.8 billion acquisition of Spirit Airlines after a federal judge in Boston found that the deal would stifle competition and raise fares for consumers. JetBlue up 6.6%, Spirit plunging 46.3%. And those are our top stories. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so appreciated. Charlie Pellet there with a Bloomberg Business News Flash.
Well, it's time for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And this week, we're talking about Elon Musk and money, specifically how he's compensated at Tesla.
Yeah, that's because Musk is pressuring Tesla's board for another massive stock award. We say another because one of the reasons Musk is the wealthiest person in the world is thanks to a $55 billion pay package.
Is that million or billion, Carol?
It is billion,
Okay,
right?
yeah, it's
Like every
billion.
time I see it, I'm like, wait, did I get that wrong? $55 billion pay package that Tesla directors authorized back to him in 2018.
And as June Grasso reminded us, that's still kind of tied up in Delaware Chancery
shareholders had some
Court
problems
right
with
now. Yes, shareholder lawsuit. So we're going to get into all this and more with Dana Hull, Bloomberg News senior technology reporter, joining us on the phone from our San Francisco bureau. Dana, good to have you with us. So Elon Musk making some posts over the weekend. He wants more equity in Tesla. What's going on here?
Well, I think what's important to remember is that Elon used to have roughly a 22% stake in Tesla, and then he sold his stock to buy X. So his lack of equity is because he made the decision to buy a social media platform. So I just think that's kind of funny and worth noting. But yes, he seems to be kind of intimating to his board, of which he is a part, that, you know, in order to really kind of push forward on AI and robotics, he would feel more comfortable if he controlled a quarter of the company. And but there's no way that the board can put together a new compensation plan while they're still waiting for Delaware Chancery Court judge to rule on the last plan, which has been tied up in this lawsuit. And so, but I think it's you know, I would assume that maybe there are some discussions happening behind the scenes, but you know, this will be a very interesting thing to watch in 2024. I mean, Musk is a very busy guy. He has a lot of business ideas. He is overseeing 6 companies. You know, without Elon Musk, what is Tesla? That's always been kind of a concern. There's always been key man risk. Is he sort of intimating that he's going to walk if he doesn't get more equity?
We'll go there because that's what Tim and I were talking before we got going, Dana. Musk wrote that unless he has roughly 25% voting control at Tesla, he'd prefer to build artificial intelligence and robotics products elsewhere. It's like a 6-year-old holding their breath, it feels like, or some would say that's what it sounds like. I mean, but is that a real threat? You've covered this company, you've covered Elon. Is that a real threat?
Well, it's interesting because for months he's been saying Tesla is not just a car company, it's an AI and a robotics company. And like the big part of the run-up in the stock over 2023 was all about, you know, Tesla being part of the Magnificent Seven and really being seen as being having a lot with AI, and they have done a lot kind of promoting this product, this robotic product called Optimus. So on the one hand, he's been like, Tesla's an AI and a robotics company. On the other hand, he's saying, if I don't get 25%, I'm going to take that AI and robotics elsewhere. So, like, what does that mean? Then Tesla would just be a car company? Like, all of the engineers who work on AI and robotics, would they go to, like, a new startup? Like, what? I'm not clear what he's thinking there in terms of how to, like,
Elon stirring the pot? What's going on?
Hey, Dana.
Yeah. On a weekend, on a holiday weekend, of course.
Yeah, I mean, I don't know if days of the week matter to Elon Musk at this point, or times of day. Dana, what about the board and the makeup of the board here? Because ultimately, it's going to be their decision. Can you talk to me and talk to us about the makeup of Tesla's board and who's on it and how sort of independent they are from Elon Musk?
Yeah, so the Tesla board is 8 people, which is pretty small, actually, considering how, just the market cap and the scope of the company. So it's 8 people. Robin Denholm, who lives in Australia, is the chair. She's been the chair for quite a while. Elon is on the board. His younger brother, Kimball Musk, is on the board. And then you have people like Joe Gebbia, who was one of the co-founders of Airbnb. You have Ira Ehrenpreis, a venture capitalist here in Silicon Valley, who is a longtime Elon friend. I mean, it's basically Elon. It's people that are considered to be very close to Elon. James Murdoch. So, how independent the board is has always been a question. It's one of the reasons why the last comp package is tied up in court, because shareholders argue that Elon was too involved in helping to design the package and that there wasn't really enough independence. But with this key man risk issue, it's hard to see the board saying no. I mean, they need to constantly kind of think of ways to incentivize Elon to stay, given that he has so many other companies under his purview.
The other part of this is, like Elon, obviously Tesla has a lot of artificial intelligence, right, in its cars. But it's like, I feel like we get mixed messages with him on AI, although, right, he's also investing in a startup and just trying to understand how he is kind of viewing the role of AI in the next level, generative AI, in all of this.
Yeah, so Tesla uses AI for its cars, right? Like, I mean, they're using AI to train their vehicles to what eventually they promise will be self-driving, and they are using AI to kind of train Optimus to do things. But then with X, he's got Grok, and then he has a separate startup called X.AI. And so, yeah, it's like AI is a very big thing for Elon right now. He's both afraid of AI, but wants to be involved in it. Like, thinks, like he's got some views on regulation around AI. But I'm not entirely clear where this is coming from. But clearly, like, he's met all of the tranches of the 2018 pay package. So what keeps him engaged in Tesla? It sounds like he wants that 25% stake.
Well, that's okay. So that's exactly where I wanted to go, Dana, because if you're the wealthiest person in the world, how much does money motivate you? Is this about actual dollars and cents? Or I should say, is it about actual millions and billions? Or is it about just the word control?
I think it's more about the control, and it's interesting. I was going over late last night the transcripts from when Elon Musk and some of the Tesla board members at the time testified in Delaware Chancery Court, and there was some really interesting testimony from Antonio Gracias, who used to be on the Tesla board and is still on the SpaceX board, and he said, what motivates behavior? It's a dopamine hit. It's high risk, high rewards. It's not just about having a big base salary or even having like standard stock. It's like, in order to get this tranche, you have to have this big milestone. So I could see the board doing something like, okay, like if Tesla has a market cap bigger than, Apple and Aramco, I'm spelling that wrong. But anyway, if Tesla's market cap exceeds that of Apple's, then you'll get this. Like, it would have to be like something that would really get Elon's juices flowing in terms of that dopamine hit.
Hey, listen, before you go, first of all, I have to ask you, have you seen Leave the World Behind on Netflix, the movie? Because Tesla's play a role in it. Minor, but it makes a point.
Oh, yeah, the Julia Roberts. I have not watched that yet.
Okay, it's just
Carol's trying to get everyone to see this, and she told me to watch it and didn't even mention the Tesla.
It weaves so much together of